money, the real money, the black rocks buying real assets. So, like, do you think now that we have larger institutional investors that we will see big drawdowns anymore? Or like, kind of, what's your view on the overall space now?
So I think the ETFs will stop that because I mean the last time on average we were having about 80-85% drawdown after we got past the retail influx. Uh, the early investors would start selling and we have an 85% drawdown. We've had that I believe in the last three cycles,
Hmm.
close to it. I'm not 100% sure, but close to around 80-85%. I don't think those are going to happen anymore because now we have derivatives, we have ETFs, and those tend to but decrease volatility in markets. You got to remember crypto is a very immature market. And that's what a lot of people compare crypto to the stock market. Say, well, the stock market doesn't have drawdowns like this. Well, the stock market is a mature market. Derivatives hold that market up. And two, circuit breakers, government regulation also decreases volatility. You go back to the 1920s, the stock market was just as volatile as crypto.
Mm.
People would lose everything and jump out of buildings. That's how bad it was. But then the government stepped in. They created circuit breakers. They increased the derivatives in the market, uh, and it caused the market to be more stable and less volatile. Now that will eventually happen to crypto, and it's starting to happen now with all the new ETFs and everything. And I don't think the drawdown will be that much. I believe we'll have a drawdown, but I don't think it's going to be 85% anymore. I think that over time, Bitcoin and cryptocurrency in general will become less and less volatile. To finally, it'll be like 10 to 15% a year.
That's strong. That is, listen, I think that when we talk this crypto stuff, I think to some people it is a different language. And I know I try to say, and there are thousands, right? At one point I remember there were 5,000 different cryptocurrencies. Um, and you know, what are you looking at when you say, okay, I'm about to put some of my money into a different crypto?
So I'm a big believer of utility.
Hmm.
Meme coins are fine. People do those all the time. I don't really believe in them 100%. Sometimes I will see an opportunity and I'll buy a meme coin if I think the hype is going to be real. But I don't believe in them long term. I believe in value. It has to be some type of value, some kind of use case, some type of utility in order for it to have long term success. And that's really what I look for. Ethereum, Bitcoin, XRP, Near Protocol, a lot of the AI tokens that are coming out now, all have real utility, and I don't think those will fail long term. Remember, right now there's 2 million cryptos,
Wow.
2 million cryptos in existence. Remember, me and you can leave this studio today, and we'll have a crypto that's out, and we could be promoting it by midnight tonight. That's how
Yeah.
fast you can make a cryptocurrency.
Mm.
Anybody can make one, right? Just like anybody can create a company and start looking for investors. So that doesn't mean the whole market's bad. It just means that you have to be careful.
Facts. So, to our viewers, right, who never bought cryptocurrency, what would you say the steps they need to take to one, buy it, secure it, and two, which should be their first investments?
So I would always say spend some time and learn what crypto is. Learn about the blockchain because what that does is, first of all, it makes your experience a lot easier and seamless. But two, it also makes you more secure in your investment. If you really don't understand it and you just bought it because your friend said it, you will panic and sell everything.
Yeah.
But if you understand the technology that underlies it, you're less likely to do that. So I always tell people to learn first. Secondly, is go to the first 10 cryptos that's been around for a while. I know that somebody will tell you that this new crypto came out that can go up 1,000 times, but those have high risk. And a lot of times in cryptocurrency, people don't realize the risk. Risk is very important in finance. You know that. You have to manage risk constantly. In any type of finance, it could be real estate, it could be stocks, it could be bonds. You have to constantly balance and rebalance risk and manage it constantly. In crypto, you have to do the same thing. The cryptos that come out that you make 1,000 times return on, they have extraordinarily high risk. The cryptos has been around, Bitcoin, XRP, Ethereum, all those, Solana. Those coins have less risk, but less potential, but also less risk, and you won't lose all of your money. So stick to the ones that have been around for a while, that have been doing well for a while as a first investment.
Which platforms would you recommend them
Uh,
use?
I would say Coinbase.
I always say Coinbase because it, at the bare minimum, it's going to follow U.S. regulations, and so
Exactly.
therefore it's a function. And then, would you recommend a person buy on Coinbase and keep it on Coinbase, or do you recommend they actually custodian themselves with a ledger?
Now, there's two schools of thought on that. Like a lot of diehard crypto people say, it's a phrase they say, "If not your keys, not your crypto," which
Mhm.
means if you don't have it on something that you own, it's not yours. Technically, Coinbase does own the crypto that's on the exchange,
Mhm.
and if something does happen, it will be like FTX, where they'll lock accounts and then they'll try to figure it out. So you won't have access to it. But I think the risk in that is low. But like
Yeah.
I said, the diehard crypto people say do take it off the exchange in case something like that happens. So
I was talking to one of my buddy who was, to your point, he got in probably 2013, and to this day, I'm, bro, why the hell you ain't tell me? Like I always say that, but he's like, bro, I have more faith in like a Coinbase exchange keeping my stuff secure than it is me ke- keeping hold of a ledger,
yeah.
aka it looks like a USB. But look, guys, we got to take a quick break, and when we come back, man, we're gonna have more with Armando. We're gonna talk about this.
Kalau didolarin satu bulannya itu kurang lebih nyampe 1.000.
Dan untuk yang sales bisa tembus kita $4.000.
Untuk chit chat selama 1 jam berbicara tentang Indonesia dibayar $25.
Waktu itu ngerjain 2 klien bersamaan, ya lebih dari 2 digit lah.
Alhamdulillah 2 digit lah.
Do you want to be like them, working remotely and earning in dollars every month? They were some of my students who have successfully became virtual assistants. They are now working remotely and assisting client entrepreneurs with different tasks, such as email and calendar management, personal errands, travel planning, basic social media management, email marketing, lead generation, and more. The great thing is that they can work from home and they can work with clients from overseas and local clients as well. And the salary can be in dollars or in rupiah. So for all of you, regardless of your background, whether you're a male or female, if you want to work from anywhere, anytime, you must try this job and register right now for my free webinar.
All right, guys, welcome back to Financial Freestyle. Look, guys, got a great guest, man. Today I'm joined by my dog, tech investor, futurist, and crypto expert Armando. And look, man, I know you're hearing it, you're seeing it. Crypto is booming, man. And I thought it's only right that the guru, you don't like that word, the expert is here with us. So talk about this new current administration and what does that mean, right? Because I think people are seeing, they having FOMO, a lot of I told you so's, but like now that we're in it, what's this mean for the crypto community?
Regardless of who.
We want to build the future of marine services, autonomous ships. Jumpstart really pushed it over the edge for us. We when you're going to a different region, you need to have the right partner.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Bitcoin blasts past $100,000. We dig into the positive sentiment, including the SEC chair announcement. Plus, it's TikTok for TikTok, as a social media giant anxiously awaits the legal decision on its upcoming US ban. And geopolitical risks across Europe and Asia abound, but US stocks stay near records. Can tech keep American exceptionalism alive? But first, let's check in on these markets, because that exceptionalism just takes a turn to the downside, off by 0.2% on the Nasdaq 100. But look, we are so close to the record highs that we saw across benchmarks yesterday. We have some nervousness ahead of the non-farm payrolls tomorrow as jobless claims come in today. And we still look at what's happening geopolitically speaking. Chips to the downside, Tesla to the upside as it gets basically a bit more optimism coming from Bank of America as they go to visit that gigafactory. Move in on some of the other asset classes of choice here on the Tech Show. Bitcoin, 100,000. We're currently at 101,000. We went past 103,000 earlier, up 3.6%. Why? A whole fledge of positive sentiment. Maybe it's a little bit to do with Fed Chair Jay Powell yesterday at Deal Book saying it's akin to gold. We've also got Putin saying that he wouldn't be in any way restraining crypto. But then you have the all-important Paul Atkins announcement. Let's go to that with Bloomberg's Mike Shepard now, because we do have someone from the Trump administration, future administration, SEC chair pick, Paul Atkins, and just give us his background. Why is he seen as crypto-friendly?
Well, he has emerged after years of being a well-known regulator here in Washington. He previously served on the SEC as a commissioner during the George W. Bush era, so he has the street cred as a regulator. But more recently, he has emerged as an advocate for digital currency and fintech. And so naturally, investors around the world were so encouraged to see Donald Trump select him as the incoming SEC chair. During the presidential campaign, Trump really advocated for changes in U.S. policy toward digital currency. He wants to make the U.S. a crypto hub. And one of the keys to that is making changes at the SEC, which under President Joe Biden has cracked down on this market after seeing some excesses that we saw during 2022 with fraudulent behavior that the current agency chair, Gary Gensler, singled out. But Trump has called for a change, and the crypto industry investors who supported his candidacy also wanted to see a change at the agency, hence their encouragement now.
And as you say, someone who has not only served on the SEC before as a commissioner, but someone who then gone on to advise fintech, in particular crypto companies. But just tell us a little bit more other than crypto. How else is he going to be facing the financial markets?
Well, I'm glad you brought that up, Caroline, because he is far from a one-trick pony. As I said, he is a seasoned regulator. One of the analysts that our colleagues spoke to yesterday after he was named referred to him as the godfather of conservative capital markets ideology. And that is a big statement, but he will be coming in there with an agenda to make broader changes at the agency, which oversees how markets report to investors and how companies report to investors and markets. And we will be looking possibly for changes in disclosure rules and also an easing up, perhaps, of some of the heavier fines that we've seen the SEC impose under Gary Gensler. That is something that Atkins has singled out in the past, and we can look to him to try to target that again in the future.
Mike Shepard, with all the context, we thank you. More on the broader implications for the crypto market. Catherine Dowling's with us, Bitwise Asset Management General Counsel and Chief Compliance Officer. And Catherine, I mean, just first and foremost, more than $100,000. For people who've been in crypto for a long time, that must feel extremely vindicating.
It does, and thanks so much for having me this morning. It was fun to watch it go over 6 digits last evening and to see it continue to hold today.
When you think of the fun side on one, but also then the realities of what perhaps Paul Atkins could mean, dig in a little bit to the SEC announcement, what you made of it.
Yeah, absolutely. First off, leading up to this announcement, really all the names that were floated were positive. So we had that. We knew it was going to be better. So there was really no wrong answer. But in this choice, it's a great choice, quite simply. You have somebody who can hit the ground running. He has been a commissioner before. He knows how the commission works. And one really important factor that we're hearing about Paul Atkins is he gets along with people. All right. You can't underestimate how important that is. He needs to be able to work with the industry. He needs to be able to work with lawmakers. I've been at those hearings in Congress where it was antagonistic. Questions weren't being answered. Eyes were being rolled. And this was the environment in which crypto was trying to achieve regulatory clarity. And it just wasn't going to happen with that back and forth and the tension that was created in the Gensler era. So we are very much looking forward to a person who can come in, hit the ground running, work with the other commissioners, and hopefully also have a dialogue with the CFTC and with lawmakers. So in the new Congress, we can get some clarity, we can get some forward motion, stablecoin bill, market structure. So quite simply, this is an excellent choice, and he's another great add to the you can't fault, regardless of your politics, you can't fault the economic team that is being put together by the transition team here.
You don't start a startup if you want to sleep at night. We are building the tools that will enable users to transform their industries. I want to get to a world where quantum computing is the way we're solving all of the hard problems.
Catherine, I want to just speak to the cynics out there. The people are now like, oh, great, crypto's got a pro-crypto SEC chair, or all hell's going to break loose. We're going to see yet more fraudulent behavior that they believe goes on in the space. I want to ask you, because specifically, yes, you're in the ecosystem, but you're someone who comes from a federal prosecutor background. You're someone who's worked for U.S. Attorney General offices in California. So speak to that concern here that we're suddenly going to see rip-roaring in crypto with no holds barred.
Right, absolutely. You're going to have that approach. You're going to have the folks who are going to say, oh, great, there's going to be no regulation. But if you actually look, the folks in the industry, we aren't asking for no regulation. We're asking for clarity, for regulation, for not just enforcement actions. And I know we've heard that quite a bit. What does that really mean if you break it down? The enforcement actions are expensive. They're limited to the case in point. You don't get a broader rule that will help businesses who either haven't engaged with the industry or trying to engage in the correct way. So having been at the U.S. Attorney's Office before and having worked very closely with the SEC, the light doesn't flip overnight. It's not suddenly that all the cases are going to disappear into the ether. It's just that you're going to have a better dialogue, you're going to get collaboration, and you're going to have a more positive approach to how we get there. We're not getting rid of everything. We're just going to get there in a more collaborative fashion. And that's what you need.
What's interesting is we are seeing actually some of the crypto-related companies just turning to the downside a little bit. A lot of run-up into this announcement, so perhaps a bit of profit-taking going on, Catherine. But spell out exactly what some of you talk about certain laws and regulations that need to be put in place. We hear about stablecoins being tackled first and foremost. Is that the number one line on the agenda from the SEC? Where do you think the first rules are going to come?
Yeah, I think stablecoin legislation coming from Congress will probably be the first one out, just because it's a smaller, nichier piece. And there's been bipartisan support, so I think that's going to be the first mover. The market structure legislation I referred to will take a little longer, but it's more of a dialogue has to happen. That's the definition. That's who is going to be the regulator, depending on where these assets sit from a definitional standpoint along the spectrum. So that'll take a little longer, but we'll have some more forward motion on both of those fronts.
Is there any risk here? Could we see Paul Atkins not take the role, not be acknowledged for the role?
Well, there's always risk, but as I said, we're hopeful that goes smoothly. I see no obstacles out there that should block it. However, as I mentioned earlier, there are a list of other folks, all of whom would be great choices. I'm really liking the Paul Atkins choice, given his involvement with the industry, his understanding, and quite frankly, as I said before, his demeanor and ability to collaborate and work with others, which is quite simply important in having a negotiated position with regard to some of this regulatory action.
Catherine Dowling, great to have you join Bitwise Asset Management. We appreciate it. Elsewhere on Capitol Hill, Elon Musk is in fact there today, stoking congressional enthusiasm. He hopes for his pretty ambitious effort to slash at least $2 trillion from the federal budget. Now, Musk and his partner in the initiative, former Republican presidential candidate Vivek Ramaswamy, plan to meet with groups of lawmakers, followed by a session that all Republican House members have been invited to. Coming up, we'll discuss the impact of the French government turmoil on the country's businesses and startup sector. That's next. This is Bloomberg Technology.
Architecture is about creating movement and motion. There's a huge community that is working together to bring it further. AI technology is evolving every day, unlocking the new possibilities.
I think we're just going to hear from the National Rally leader, Marine Le Pen, now, who was speaking with Bloomberg earlier today. Just take a listen.
En tout cas, ce que j'ai dit, c'est que la démission du président de la République.
What I said was that the president's resignation is a personal decision for him and can only take place, in my view, when a political crisis happens or an institutional crisis can no longer have any other solution than the resignation of the president of the republic. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with 3 blocs, which in reality can't implement a policy.
That was Marine Le Pen of the National Rally, commenting on President Macron's position after, of course, he has been dismissing growing calls for his own resignations from politicians across the political spectrum. Macron came out saying he will serve out his second term in full. He's set to talk further at 8 p.m. local time. That's 2 p.m. here in New York. But let's just discuss the impact of all this political drama on French businesses, on tech companies. Bloomberg's Benoit Barthelot does that for us. And how is sentiment at the moment? Is there a moment of crisis among executive boards?
Yes, I mean, it's a moment of uncertainty. And as we know, business leaders don't like uncertainty. They like to be able to forecast their budget for next year, etc. Actually, that uncertainty started this summer in June when Macron called the unexpected snap election. So that's ongoing, basically. Barnier, the prime minister, was preparing a budget for next year that was actually going to slash some helps for innovative startups on R&D, etc. So now there is uncertainty if it's going to happen. There is a few weeks left for Macron first to pick a new prime minister, right, and then to vote, if possible, the budget. So yeah, like startup leaders and companies in general are waiting to see what's going to be in that budget, or if we are going to continue with this year's budget, which could be reconducted through next year through a special law.
Benoit, it's notable that leaders like Eric Schmidt, of course, former Google CEO and now focused on geopolitics in particular, has come on this show and said France is the standout in Europe in terms of getting things done, having a really healthy ecosystem where companies like Mistral for AI can thrive. Has that been something being questioned of late?
It's not being questioned, but you're right. Like Macron started about 7 years ago when he was first elected, a sort of push for what he called a startup nation. He helped companies to hire foreign scientists, for foreign companies to come to France to start their business. He's been doing some helps to get visas for foreign tech workers, for example, and then the push in AI, led by OpenAI, led to new French startups trying to rival with OpenAI, like Mistral, as you said. Macron is also going to be organizing a world summit in February on AI. There certainly is this push that companies hope can continue, and obviously the political situation is not the best just to to ensure that this momentum, which is quite fragile, can keep going.
Benoit, it's great to have you, Benoit Barthelot, on the impact in France at the moment. Sticking with international politics, South Korea's main opposition leader says it may be difficult to get enough support from the ruling party to impeach President Yoon Suk Yeol this week after his declaration of martial law. But he remains committed to removing the president. Democratic Party leader Lee Jae-myung sat down for an interview with Bloomberg earlier today. Here's what he had to say.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
Important for companies such as Samsung, SK Hynix, of course, tech more broadly. Let's discuss the impact of all this geopolitical uncertainty on tech markets more broadly. Jay Jacobs, US head of thematic active ETFs and BlackRock. And thus far, Jay, it hasn't had much impact. US stocks have continued to show their exceptionalism. We've had record highs yesterday amid global turmoil. What do you make of that?
Well, actually, the tech sector in the United States is one of the most geopolitically exposed sectors out there. About 60% of the revenue of tech comes from overseas. So one of the ways that we've been looking about geopolitical fragmentation is, can you really tilt your exposures within the tech sector to companies that buy in the United States, build in the US, sell in the United States, really to try to isolate some of that geopolitical risk that I think is very present in the tech sector in particular.
Where would that end up leading you? Which companies? I mean, first and foremost, you might think, well, those that have been benefiting from the CHIPS Act, who've been building here in the United States, but then Intel hasn't exactly been having the best of times of it.
Well, it's coming from a range of companies just kind of across different industries within technology. I mean, I think if we look at artificial intelligence, we see that a lot of the leadership is with US-based companies. For example, you could look specifically at data centers and power companies as being really important parts of the AI ecosystem, but are very localized to the United States. You're getting some of that isolation from geopolitics. We even brought out an entire fund based off of this strategy, IETC, which is really looking at the tech sector, but tilting towards those US kind of very domestic focused companies to isolate geopolitical risk.
That's really interesting. The infrastructure build out is one that many have turned to, other than just thinking, okay, NVIDIA, chips and shovels. We then think about the next layer down, the energy, the companies. But how many people are asking you, well, what about application layers? What about the next frontier of AI?
That's really where a lot of the conversations are going. I think, if we look at the last 2 years, it's been a huge focus on the Magnificent Seven, and it's been a really concentrated rally within artificial intelligence. We think as we enter the third year of what we're really calling the build phase of artificial intelligence, this is when the markets are going to recognize that this is something much bigger that's going to impact a wider range of technology stocks, a wider range of semiconductor stocks, the power stocks. It could even impact cybersecurity stocks as data gets more valuable and needs to be protected. And you could even look at adjacent industries and financial services and healthcare where AI can really create more productivity and efficiency. So I think we're going to see a transition in 2025 to really a broadening of that artificial intelligence story.
How much of the story is starting to pick up back in crypto for you as well, Jay?
Well, it's significant. Of course, Bitcoin passing 100,000 is a significant milestone. But really, you have to take a step back and look at the broader picture of why is this happening. I think there's certainly some anticipation of more friendly regulatory tailwinds. But also in your previous segment, you were just highlighting some of the geopolitical risk around the world, in Europe, in Asia. And in a lot of ways, professional managers, which are really just starting to access digital assets for the first time with our launch of IBIT, our Bitcoin ETP, are thinking about it as a hedge in their portfolio. This thing behaves very differently from stocks and bonds. And if you see more geopolitical risk, Bitcoin could really benefit.
What's interesting about your role is not only are you thinking about strategy, thought leadership, clients, but you're also thinking about the international ETF offering as well. And I'm just interested about whether anyone is betting on outside of the US.
They are, but in more targeted ways, where we've seen some really significant flows in the past year, specifically looking at India as really a play on changing supply chains, particularly if you look at a lot of the reshoring that's happening in the United States. there's been an effort to build more here domestically, but also to diversify supply chains geographically. And India has been a major beneficiary, just like we have a CHIPS Act in the United States. They've been focused on building out more chip capacity as well as building out more tech manufacturing. So India has been a big beneficiary, Mexico as well, as you look at nearshoring and the interplay of growing trade relations between the US and Mexico.
Fascinating. Jay Jacobs, thanks so much for that. US head of thematic and active ETFs over at BlackRock. Meanwhile, coming up, we're going to be hearing from AMD CEO Lisa Su on her plan to keep on taking on NVIDIA. That's next. This is Bloomberg Technology.
Our initial vision is to build a smart city that changes how people think about urban living. We always think to push the boundaries, how we can shape our future.
AMD CEO Lisa Su spent the better part of her 10-year career engineering one of the biggest turnarounds in Silicon Valley history. Now, she's preparing for a battle against NVIDIA. Emily Chang sat down with the CEO at AMD's headquarters in Austin, Texas, to discuss the bets she's making to compete, a long view on the global chip supply chain, and even her distant family link with NVIDIA CEO Jensen Huang. Take a listen.
NVIDIA is seen as the dominant force in AI right now, and AMD is widely considered the next best option. Is that good enough for you? Do you like being seen as the underdog?
I wouldn't call it a like or dislike. What I would say is, AMD has had a history of doing amazing things. And from that standpoint, we've always been in this place where we haven't necessarily had the same amount of people that other larger companies have, but we've certainly punched well above our weight in certain terms of technology capability, in terms of impact on the industry.
This is the most complex, highest performance computer.
People are kind of obsessed with the fact that you and Jensen are distant cousins. I know that you are competitors, but do you ever trade notes?
Well, first of all, Jensen is brilliant, so I fully admire him for that. We were really distant, so we didn't grow up together. We actually met at an industry event, so it wasn't until we were well into our careers.
So no family dinners, just to put the rumor to rest.
No family dinners, and it's an interesting coincidence.
So many of your customers are building their own chips. Hyperscalers like Apple and Meta and Google and Microsoft and Amazon. Is that a threat?
This is a huge market, Emily. There's more than enough chips for everybody to build. And the beauty of this is everyone's recognized that chips are so important. Yes, so it's natural that they're going to have their own capability.
Has the shakeup of a very established industry surprised even you?
It has a little bit, I have to say.
AMD CEO Lisa Su there alongside Bloomberg's Emily Chang. Check out the full episode of The Circuit tonight on Bloomberg TV, 10 p.m. Eastern, or stream on Bloomberg Originals, 8 p.m. Eastern. Now, it's time for Talking Tech. First up, all chips. TSMC is in talks with NVIDIA to produce Blackwell AI chips at TSMC's new plant in Arizona, according to Reuters. Now, TSMC is said to be making preparations to start production early next year. Plus, Apple's major manufacturing partner, Foxconn, reported a second consecutive month of just single-digit sales growth, raising concerns that demand for AI infrastructure won't be able to offset weak iPhone sales. Apple's historically accounted for about 50% of Hon Hai's overall sales. And the EU's new competition chief says a potential split of Google's businesses is still under consideration. Teresa Ribera, who started her 5-year term this week, said she aims to build on the legacy of her predecessor, Margaret Vestager. Coming up, we're going to be discussing why hedge funds are making MicroStrategy into Wall Street's hottest trade right now. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets because while we're teetering around record highs, the Nasdaq is only off by 11 points. The Nasdaq 100, that is, the big benchmark for big tech. We are being put to the upside by the likes of Tesla, for example. Chip stocks on the downside, though. We're looking at Bitcoin is the real benchmark that we're all looking at the moment. It's now got an ecosystem worth $2 trillion. I mean, actually smaller than some of the biggest tech companies, but still, we have run up past $100,000, up another 3.5% today. Move on and have a look at some of the individual movers within that NASDAQ 100 and some of the benchmarks. Now, biggest points drag to the downside is Synopsys. Integral to chip design, to chip manufacturing, basically to testing your designs, and numbers came in a little bit weak. So we have seen a drag down for the electronic design automation software company today. First quarter forecast was weaker than expected. Intel off by 3.4%, maybe some of that moon music around chips pulling it lower. There has been some interesting news in terms of its board trying to shore it up, and the Microchip CEO comes on. So does a former ASML chief executive too. So two key experienced operators coming onto the Intel board as they seek a new CEO. MicroStrategy actually just turning to the downside, off by 1.7%, having been rising earlier. But we are going to dig deep on all things MicroStrategy after what has been a phenomenal run-up in the stock. Why? Because it's basically a Bitcoin proxy. We can talk about that with Bloomberg's Yijin Chen. And Yijin, I mean, MicroStrategy has been beloved of the retail community, but actually some institutional players have been getting in on Michael Saylor's Bitcoin base.
Yeah, exactly. So I just published a story today about how MicroStrategy has become the hottest trade right now with Wall Street. And if you look, hedge fund managers, they are buying the convertible bonds that the other instrument, because MicroStrategy has this plan about keep raising capital, right, to fund this Bitcoin buying. And so they have already raised 6 billion convertible bonds. And for hedge funds, this is a perfect instrument for them to play a market neutral arbitrage bet. And this is a complex bet, but the essential part of it is to bet on the volatility. So they are riding on the volatility of the underlying of MicroStrategy. As we see today, there's a big jump, right? Like at the open, MicroStrategy was up like almost 9% when Bitcoin hit its new record. So MicroStrategy move on that, lots of price wins, and that just make the convertible arbitrage trade much more appealing to this hedge fund group.
We were talking about how the retail frenzy has been there, and actually a lot of people playing leveraged bets on MicroStrategy, getting into 2x, 3x, the ETF exposure. That actually proved quite a difficulty from a liquidity perspective in the market. Is there any talk about worries of this volatility or playing this volatility when you're looking at institutional and retail?
Sure, yeah. I would say MicroStrategy is just no short of volatility, right? Because it's a Bitcoin proxy, so the volatility rides on the Bitcoin pricing, but also the premium of its Bitcoin holding, because it's now trading at 200% more than it's like the value of Bitcoin it holds. And those things could also move around. And then you have the retail that's buying the ETF, leverage ETF 2 times, right? Long, 2 times short. That's that. And then the institution. And I think in a way that the company even itself told that it's more volatile than any S&P 500 stock. So that's where, the money flow coming from, and people are just riding on the volatility and the retail frenzy.
According to Bloomberg, 14% of outstanding shares are currently shorted, but thus far that has been a painful trade. Thank you so much. All things MicroStrategy with Yijin Chen there. Another story we're tracking, Chinese hackers compromised 8 American telecom companies as part of a wide-ranging espionage effort to gather intelligence on prominent US citizens. That's according to Biden administration officials. Here for the details, Bloomberg's Kelsey Griffiths. And kind of absolutely shocking, really, that 8 have been compromised and we can't seem to get them out.
That's exactly right, Caroline. What we do know, and the details are pretty scarce on the ground right now, is that multiple U.S. telecoms have been breached in this seemingly very wide and broad campaign to burrow into our telecommunication networks and glean really important and valuable details about public officials and about life in the U.S.
We also know, I believe there's worries about both incoming president and vice president in terms of being compromised on their communications. Just talk to us about what the CEOs have been saying. We understand that AT&T CEO has been speaking with other lawmakers. Who has come out and sort of talked about this publicly, though?
That's right. There haven't been a lot of companies that have so far come out publicly and talked about this. T-Mobile last week became the first carrier to publicly shared details about what they had seen on their networks and sort of some of the markers of that threat. And they spoke with me about that exclusively. They also put out a blog post last week that detailed some of those threats. So I think that, what we're seeing is a really sophisticated attempt, and T-Mobile caught it early, but some of the other carriers, it seems, weren't so lucky.
Kelsey, fascinating reporting. And I think Senator Marco Rubio, who's eventually, of course, meant to be Secretary of State, talking about how this is as bad as it gets. Kelsey Griffiths on all things hacking. Coming up, does the unicorn status need to be reevaluated? We'll be discussing that with Rebecca Line, co-founder and general partners of Canvas Ventures. That's next. This is Bloomberg Technology.
You don't start a startup if you want to sleep at night. We are building the tools that will enable users to transform their industries. I want to get to a world where quantum computing is the way we're solving all of the hard problems.
In the last year, more than 1,400 startups were valued at more than $1 billion. But actually, only 15% claimed profitability. That's how our next guest is measuring, well, the fact that these numbers don't seem to be a measure of real success anymore. Unicorn status, how do we reevaluate it? And what are the new markers for that success? Rebecca Lynn, I'm pleased to say, co-founder and general partner of Canvas Ventures. We steal all your great statistics, Rebecca, but the statistics are shocking. And I'm interested as to what you think the new benchmark is and how many of those 1,400 actually still vindicate a $1 billion valuation.
Yeah, I think the number I've heard is it would take about 20 years for all of those unicorns to actually make it to the public market, and only 15% are profitable. And on top of that, a lot of them have been around, for over 12 years. So it's just way too long to really hit their stride and hit profitability. I think with Gen AI now, a lot of the metrics we've seen in the past aren't really the metrics, we're looking for in the future for success. Unicorn status, I think people have said that we need a new beast. I think that's absolutely true. And they're, getting to that $1 billion valuation is not really not meaningful anymore. And then on top of that, what we're seeing with Gen AI is an incredible opportunity to generate revenue quickly. We're seeing this in the statistics about how quickly companies can get to $1 million of revenue. It used to take companies quite a lot longer. Right now with Gen AI, the median is like 11 months, right? And we actually saw a company the other day that got to $1 million of ARR in 2 weeks.
But is that sustainable, Rebecca? Like, is that something?
It's not.
No.
No, I don't think so. I think what's happened, I don't think it's sustainable. And so what we really are looking for are companies that have sort of a unique insight and very deep industry knowledge in the area that they're going into. We think that's more important than it ever was before. And I think this, ARR, the ARR ramp we're seeing, which so many VCs were hanging their hats on for so long, is really ephemeral. And so, what's happening is, these big enterprise companies and consumers too are signing up and they're paying money to really, really pilot, the technology. And at the same time, we're seeing massive, enterprise companies like Salesforce, hire 1,400 new salespeople to capture that opportunity.
How many agents, Rebecca, on that note of Salesforce, how many agent AI companies are you being hit with at the moment?
Oh my gosh, dozens a day. And I think those are features. Those are features of, large enterprise companies in the future.
They're features. So what is the reality? What companies do you want to see being built? What problems are you wanting to see being solved that is unique right now?
I love that question. Thank you. It's so exciting right now to be in venture. There are so many theses out there that we have wanted to invest in for a very long time. And there are companies that tried to do it, but the technology just wasn't there yet. I mean, a prime example, was of a company that was impacted by Gen AI was Casetext. Casetext was doing really well. They had 10,000, customers. but they couldn't fulfill the last part of their promise, which was really to truly stand in the shoes of a legal counsel. And when Gen AI came along, they could do that. And that was a huge unlock and why they were purchased very quickly by Thomson Reuters. Another one that we've wanted to see for a very long time is voice. And I think that is the most exciting thing about Gen AI right now. And so when we were in Doximity for many years, I just thought, we should be taking the entire patient call volume, both inbound and outbound, off the shoulders of the physician's office. That should just happen. And the tech just wasn't there yet. We've been looking for this tech ever since, we led Siri many moons ago, right? Yeah. And with Gen AI, it suddenly is there. So we invested in a company pretty recently called Parakeet, with a founder with super deep technical knowledge on the medical space. And they're doing just that. They're taking the call volume, the inbound and outbound call volume, off the shoulders of a doctor's practice. And that to me is really, really exciting.
We listen to you because of the amount of times you're on a Midas list, the amount of times you're called one of the top VCs, but also because of the exits that you have seen. And you call out Casetext, which is M&A. We've also seen, as you just mentioned, Luminar, for example, which actually managed to do the public kind of route. How are you anticipating some of your portfolio going public come 2025?
Yeah, I think the window is starting to open. There are so many companies that are ready. I think the market's ready. I think the new administration people are ready for the unlock, and I do think we'll see the public market start to open up. Maybe I'm too optimistic. I don't know, but I do think that that's a very viable option for people going forward. The other thing is, I think M&A. I actually prefer M&A every single time, because it's just a much more linear exit for founders often. And so I think founders should always keep both options in mind. My most successful companies have had a very exciting IPO path, but have also dual tracked with an M&A path at the same time.
Rebecca Lynn, we thank you for pushing ahead to next year, co-founder and general partner of Canvas Ventures. We hope to see you in that new year. Meanwhile, let's talk about a company that's part of one of the most valuable startups out there, ByteDance's TikTok. It's tripled its US shopping sales to over $100 million. The social media platform says its app drew in 165% annual increase in shoppers for the 2 days between Black Friday and Cyber Monday. This comes as the app faces, of course, potential shutdown in January, as regulators fear its parent company ByteDance poses a national security threat. Let's dig into that TikTok on TikTok. Sandra Levine is with us.
Architecture is about creating movements and motion. There's a huge community that is working together to bring it further. AI technology is evolving every day, unlocking the new possibilities.
It could come tomorrow. We've been sat here all week thinking that we'll get a ruling on whether or not the case can continue that US would ban TikTok come January 19th.
Yeah, it is finally here. We are expecting a decision probably out of Washington tomorrow morning. And it's a really consequential moment. It feels like it's been a very long time, but this is actually a hugely consequential moment. Probably the biggest deal for TikTok since Biden actually signed the divestiture ban law back in April. And part of the reason this is such a huge deal is because if this comes to pass, this will be the first time that a foreign-owned social media app has ever been banned in this country. And by the way, it's not just a social media app. It is a social media app used by half of the American population. And there are more people on TikTok in America than voted in our last election.
And the future administration ahead of it is on TikTok. Many of us are on TikTok. And I feel like the anxiety around whether it is going to be banned has just dampened away as time's gone on. But are we feeling that the US court is going to let this continue, or could they take it off the table?
No one knows for certain. I think reading the tea leaves, it seems likely that the court is going to uphold this law that would potentially see TikTok shut down next month. But that doesn't mean that that's sort of the end of the line for TikTok. I think that it's probably not going to disappear off of our phones in January. In all likelihood, if TikTok loses tomorrow, they are probably going to somehow appeal the decision, either asking the DC Circuit to take it up and hear it again, or potentially taking it to the Supreme Court.
How has TikTok been just countering this, lobbying behind the scenes? Because we haven't heard much publicly.
Well, I think a huge piece of this is actually American investors, and it's also a hugely overlooked piece. I think that American investors have so much money tied up with ByteDance, which is TikTok's parent company. They have collectively billions, and so it's not just a decision tomorrow that will affect millions of people. It's also a decision that will affect billions of dollars. And I think one really big question I've had about what's been going on behind the scenes is, how will Trump's ties to some of these investors? We know that there's at least one big Republican mega donor, Jeff Yass, who Trump is, has a good relationship with. Big question is, how are these American investors behind the scenes potentially going to affect the outcome for the app's future here?
Sequoia, General Atlantic, Susquehanna, International, you name a lot of them in a great piece today. Go and check out the Tech Daily with Alexandra Levine, and stay tuned for that decision. Coming up, Andrew gets an AI boost partnering with OpenAI. More on that next. Meanwhile, let's just check in on Etsy, because they've announced their new CFO, who is going to be joining. Of course, executive changes coming from a CMO perspective, but Lanny Baker is going to be joining as Chief Financial Officer, coming from Eventbrite, as Rachel Glazer leaves. This is Bloomberg Technology. OpenAI, it's partnering with defense tech company Anduril on anti-drone systems. Bloomberg's Shireen Ghaffari has the inside track. And Shireen, this is more of a push we're seeing from OpenAI to be something that serves US defense, the government particularly.
That's right. So the company has said that they want to prioritize supporting the U.S. government and its democratic allies in adopting AI. And a big part of that is increasing their defense partnerships. So they have also done a partnership with the U.S. Air Force Research Lab. They're working with Los Alamos, and they've hired a former top Pentagon official to head up their policy in that area, and also added the former head of the NSA to their board recently. So we're seeing a lot of movement in that direction.
How do employees feel about it? Because it can sometimes be controversial, this kind of work.
Yeah, absolutely. Historically in the past, for example, in 2018, when Google was starting to partner with the Pentagon in what was called Project Maven, it was hugely controversial. Employees protested. The partnership ended up not working out at that time. However, now we're seeing, I would say, less resistance from employees generally. Of course, that could change, but so far we haven't seen much pushback. And it's not just OpenAI. OpenAI's competitor Anthropic recently did a big partnership with Palantir and Amazon, and Meta has also been doing some work in this area. So I think this is a trend we're continuing to see grow.
And very briefly, look, Sam Altman was at the DealBook event yesterday talking about his optimism that Elon Musk isn't going to be too vindictive when close to Donald Trump. Do you think that this could be in any way an issue?
I think it's really too soon to say what is going to happen in terms of AI policy and exactly how or if Elon will be involved. We know, of course, he's leading Doge, but so far there's still a lot that's being decided about who and how AI policy is going to shake out. So I would say it's too soon to say.
Shireen Ghaffari. Brilliant to have you. Thank you. Meanwhile, President-elect Trump, as we were just talking about, has now nominated fintech billionaire and SpaceX astronaut Jared Isaacman to lead NASA. For more, Bloomberg's Lauren Grush joins us. And look, he has been busy going up and doing spacewalks with SpaceX, and now he's going to be leaving his CEO role.
Yes, absolutely. I mean, if there's one thing that most people can say about Jared is he's very passionate about space. He really kind of burst onto the scene in 2021 when he announced that he had booked the first all-civilian astronaut crew trip to space on SpaceX. And ever since then, he's only become more and more of a central figure at SpaceX. So it's certainly a very interesting pick. And I think it's going to open up a lot of questions about his relationship with SpaceX. I mean, you have to understand NASA and SpaceX are very big partners, and SpaceX is maybe the biggest contractor that NASA has right now. So it's definitely a very unique pick for the agency that I don't think we've seen really before.
We want to build the future of Marines. This is autonomous chips that can be used for different things at the same time. Initially, people said that this looks like something I can build in my garage.
Yeah, so replacing Bill Nelson, are there ways in which they have protections in place to not have these blurred lines as to someone who ultimately doesn't work for SpaceX, but has plowed an awful lot of his personal fortune into rides using SpaceX, and I'm sure has a personal relationship across the board?
Absolutely. I do believe there are some areas where he might have to recuse himself. For instance, if he has an investment in SpaceX where he holds shares, it's possible he might have to divest those. If there are major decisions that are being made about future contracting, it's possible he might have to recuse himself from making those decisions. A lot of the times NASA administrators don't get into those nitty-gritty details. But again, it's a lot of open questions I think a lot of people will be asking, because anytime NASA makes a decision on a major NASA contract, those can get quite contentious. We saw that when they put out bids for their human landing system. SpaceX won that, but Blue Origin ended up suing NASA and the federal government over that decision. So those decisions can get quite contentious, and I think his selection will only add fuel to those fires.
There's pictures of Jared Isaacman doing that spacewalk quite a few months ago. Interesting that Starlink, of course, is a customer of Shift4 Payments, so plenty of interlinking going on. We thank you bringing us the latest. Bloomberg's Lauren Grush on the latest from Trump administration picks. That does it for this edition of Bloomberg Technology. You don't want to forget to check out the podcast. You can find it on the terminal, as well as on Apple, on Spotify, and on iHeart. From New York, with stocks near record highs, this is Bloomberg Technology.
Our initial vision is to build a smart city that changes how people think about urban living. We always think to push the boundaries. Our initial vision is to build a smart city that changes how people think about urban living. We always think to push the boundaries, how we can shape our future.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Welcome to Bloomberg Technology. I'm Caroline Hyde in Bloomberg's world headquarters in New York. There is a lot to get to this hour. But let's start with some of the political turmoil in France. That no confidence vote that could topple the country's current government. Bloomberg's Caroline Conan is there for the latest in Paris. Debate finally getting underway, but for our global audience and our technology audience, Caroline, fill us in on what we expect in the next hour or so.
So the debate just started right here behind me inside the National Assembly. You've got Éric Coquerel at the moment speaking. He is the leader of the far left group in the National Assembly. And this is the group that is proposing this motion of no confidence in order to topple Michel Barnier's government and make Michel Barnier's government collapse. That vote could happen in the next couple of hours. And we're pretty sure of the outcome as we speak, given the National Rally, so the far-right party of Marine Le Pen, has said that they will back this motion of no confidence, even if it was presented by the far left. So the two extremes joining forces in order to overthrow this Barnier government.
We can see the impact on the euro. We've seen the impact on the price of French debt. But for those that are running businesses, for a technology audience that cares about the French technology startups, for example, what does a change or collapsing government mean for them?
Of course, the main question is, are we going to have a 2025 budget, and what is left in this budget? There will probably be some special laws in order to roll over the 2024 budget, but that means a lot of help and, for example, a reduction of contributions from companies in order to hire lowest income employees. These are not going to be automatically indexed on inflation, meaning that it's going to be harder, it's going to cost more for those companies to hire some of those employees. So technically, in the short term, it's a little unclear, but in the longer term, if there is still no budget over the next few weeks before the end of December, that will have a big impact on companies because we'll have this 2024 budget staying the same without any increase.
Caroline, we thank you so much for the latest from Paris. We'll come back to you on any of the breaking news. But first, let's get a check on the markets, because despite political turmoil worldwide, it feels often, the Nasdaq is at a record high, the S&P is at a record high, and we have tech to thank for it. In large part, we see Salesforce also at a record high, up 8.7% off the back of its earnings, really managing to pull out the power from its AI agent force focus. We're looking at Okta. This is application software company, also rising at one point up more than 13%. We're now up 5% on the back of a beat and raise for its earnings after the bell yesterday. And Marvell Technology, it's now up some 20%, soaring it as well to a record high. This is the chip company, had better than expected results and stronger earnings forecast as well. What's notable is also Marvell's CEO, Matt Murphy, said on the call that he is committed to the company despite being a potential contender, we understand, to lead Intel. And that is where we want to go next, because Intel's search for a new CEO is the focus for many at the moment. And is it going to be focusing heavily on outsiders? The chip maker is considering candidates such as Matt Murphy, but also the former Cadence Design Systems CEO, Lip Bhutan, who actually recently quit the board of Intel. Let's bring in Bloomberg's Ryan Gould for more. Ryan, is it surprising to see Intel not go to its own bench?
Caroline, I think it is. When you think this is the first time since 1968, when Intel was founded, that they will actually sort of think about looking outside. I think that kind of gets to the heart of what it means to be in semiconductors right now. Semiconductors takes a lot of expertise. It takes a lot of nous. And, some of the decisions that were made, over the years, under Pat and even under Bob Swan, Krasnich before him, these are decisions that will pay if you make them right in 10 years' time. That's how long it takes to get some things over the line in semiconductors, and to go out and think about who your next CEO is, it's not an easy task.
Well, many are going to look that Pat Gelsinger didn't actually get that much time. He came from VMware, EMC, but he was, in many ways, an Intel lifer. He'd started his career there. And what, therefore, is really the attractiveness of this role at the moment? Marvell, for example, Matt Murphy doing a great job showing the power of AI strategy. Is it not going to be that appetizing a role to be taking on right now?
I think it could be a poison chalice. I think some people do view it as a poison chalice, just given the challenges. Because when you think about AMD, for instance, a big rival to Intel, it made the decision to go fabless years and years ago.
Yeah.
Intel is still, still a fab chip company.
They're trying to be more of a fab.
Exactly, and rival TSMC, and we all know how that went. So whoever comes in has a massive challenge on their hands. That said, though, the fact that we reported yesterday that Matt Murphy is being considered, Lip Bhutan being considered, let's remember that Lip Bu is a big advocate for, making Intel more sort of industrially manufacturing sound. So, that could be interesting, but, there are many others too, because we're told, for instance, when we talk to sources, that anyone who puts their hand up who has a remote degree of expertise in semiconductors will likely be considered. And, I can tell you that Spencer Stewart, that's running the process to hire the new CEO right now, they're saying that we're probably going to look for 4 or 5 candidates and then shortlist to 1 to 2.
Do we get a time frame?
I think they're looking to this as soon as possible.
Ryan, keeping us up to speed. We thank you, Ryan Gould, there. Meanwhile, let's just get a deeper look at the chip space, tech market more broadly. Tony Wong of T. Rowe Price is with us, managing the Science and Technology Fund, more than $9 billion under management there. And basically, you look like you're in every chip name apart from Intel in many ways, Tony. Is that right? And how are you looking at the ecosystem and its strength?
Yeah, I think that's a great question. When you look at our holdings, we currently are focused on the compute aspect of things. And so looking at AI, NVIDIA is a big holding, as well as Marvell and Broadcom. My view is that the compute TAM is growing significantly as the foundational models are kind of growing exponentially every year. And so the chip companies that have the scale, the expertise to tape out the leading edge are, I think, going to be advantageous in terms of capturing this compute TAM. So I think, I like the space long term, but, we are selective in our holdings here, specifically those three especially.
Well, let's talk about Marvell, for example. Would it be a worry if the leader did jump ship to Intel?
You don't start a startup if you want to sleep at night. We are building the tools that will enable users to transform their industries. I want to get to a world where quantum computing is the way we're solving all of the hard problems.
Well, I think Matt Murphy has created a ton of value over the years. You look at when they picked it up, it was in the kind of a sub $10 billion market cap. And he's, over the years, done a lot of great M&A and capital allocation, spun businesses off, acquired a world-class custom team that is right now delivering a lot of the AI custom compute chips for the likes of Amazon, for example. And so, I think that it would be a concern if he jumped ship. I do think it's he's put a lot of work into Marvell. He's got a great team there, and they're kind of firing on all cylinders coming out of the last few years. So, from my perspective, it seems like he does have a lot of good reasons to stay at Marvell, and so I'm taking his word, what he said last night, kind of at face value here.
Looking at your top 10 holdings, Marvell is one of them. At the end of October, is about 2% of the fund. The top holding is NVIDIA, as you mentioned. Interestingly, we had AWS CEO Matt Garman on the show, on the Pro across our network yesterday, and we're going to be playing out a bit of that sound later. But Amazon is the best points contributor to the NASDAQ today. They had a whole raft of chip announcements. What does that mean for NVIDIA? What does it mean in terms of their own customers building custom silicon?
Yeah, I don't think that story is anything new. It's just generally the evolution of compute. Essentially, you have the new workloads that need more general purpose NVIDIA chips. And then over time, as the workloads get bigger and they mature and stabilize, you kind of bring in the custom compute. And so, I think the two kind of coexist, and they have coexisted over the last decade. And so going forward, I think of them as kind of symbiotic relationship in some ways, and that it is just an evidence that the chip kind of TAM is increasing, and the compute TAM and the demands continue to increase because the workloads are getting so big. It makes sense to have a custom chip. But what's special is that previously, kind of 5-10 years ago, we thought AI would just be subject to just only identifying what's a cat and what's not a cat image. And so now it's transformed into something that no one could have thought about or predicted. So, I think that it's just, we've had this debate before of but I think what you've seen is that both kind of NVIDIA and the custom chip providers have done well as the TAM has increased.
I am not a cat forever to be part of internet's story. What then about NVIDIA's valuation at these levels? You're talking about how finally we're getting the return on investment from an application layer perspective of AI. We're actually using it in our everyday life, our work life. Can NVIDIA grow in terms of its own valuation, or have we priced it all in?
Yeah, I think that's a great question. I mean, $3.34 trillion, that's market cap right now, is pretty astounding. If you look at the profitability and the free cash flow, I mean, it's kind of pretty reasonable, 30-35 times forward earnings. And so while the stock price has gone up a lot, I think that when you look at valuation, it's not an extreme. It's not at 100 times earnings, which I think that says the market is saying there is a little bit of concern of how sustainable the numbers are, whether profitability can continue to be at these levels. And so, I think the valuation at face value is actually relatively moderate, given its history and its growth.
It is extraordinary just to take a step back and think that on this day we're at a record high for the NASDAQ 100. Apple's at a record high. We've got NVIDIA continuing to rise in terms of market cap. And then you have the Salesforce numbers and its own record high in terms of share price today. What do you make of their application of AI Agent Force, and whether actually it's going to make them more profitable as well as getting revenue off the ground?
Yeah, I think it's an exciting time in tech, and that AI could be this next productivity revolution, and so kind of uncapping labor as we know it with digital agents and digital labor that essentially doesn't need to sleep, doesn't need to take breaks, operate 24/7, and can operate alongside humans. And so I think that's what's really exciting. And all these software companies are now kind of seeing the opportunity and going after it. And everyone wants to be the platform where you store your data, you operate. And so whether that's Microsoft, ServiceNow, Salesforce, I think it's a big opportunity. And so we've kind of seen, the first year of ChatGPT or two be dominated by the chip companies like NVIDIA, dominating the infrastructure layer. And so now I think that we're seeing it on the app layer, which is really exciting because you need to see it in the app layer for kind of the chip companies to continue doing well. And, I think we are kind of seeing that in the last kind of earnings season.
Again, we've seen that shift, as you say, movement from all in on chips, then shifting into software. But boy, is it playing out in some of the valuations. I'm looking at Palantir trading at 180 times future earnings. That had been the darling of the AI story. Will other companies rip to get to those sorts of valuation levels? Or is Palantir sort of overdone as well? You talk about how we're at this crucial moment where AI is going to disrupt the workforce, but I feel that the market's been trying to price that in for quite a while.
Yeah, absolutely. And I think that not every company can be like what Palantir is doing. I think to do AI is really, really hard. And they've been the AI leader for the last decade. And I think of them bringing AI to the government and the enterprise. And so I think what's special about them is that they've got this very centralized ontology for AI, and then they can kind of customize that for clients, and clients can build on that. So I think them as a platform, and you think about what the United States government is trying to doing now is to be more efficient. And part of that is bringing AI and technology to automate things and to modernize people's processing and data. And so I don't think every company can be like Palantir. I think there's some special ones in kind of the AI software mid-caps area, kind of like AppLovin, for example, or Axon. I like, where there's specific vertical applications where AI can be applied and really drive a lot of automation and intelligence.
I love that you take us out to some of the different names as well. Tony Wang of T. Rowe Price, brilliant to have you on. Thank you. Now, the latest on a tragic story out of New York City. Brian Thompson, the CEO of United Health Group's insurance division, was fatally shot in Manhattan this morning. He was shot in the chest outside the New York Hilton Midtown, where the company was hosting an investor day, according to people familiar with the situation. Now, early reports suggest that the attack was targeted, according to a person familiar. The NYPD is expected to provide an update later this hour. We'll continue to bring you the latest on Bloomberg TV and radio throughout the day.
Architecture is about creating movement and motion. There's a huge community that is working together to bring it further. AI technology is evolving every day, unlocking the new possibilities.
Last week, Bloomberg reported that the FTC is investigating into Microsoft, which is focusing on how the tech giant is bundling its Windows operating system with other software, as well as its dominance in cybersecurity. Now, reports from The Information are saying that the agency is asking about Microsoft's deal with OpenAI, which grants, of course, the cloud giant the exclusive right to run the startup models on the cloud servers, as well as a cut of the company's revenue. Antitrust lawyer David Belto joins us now. He previously worked as former policy director of the FTC's Bureau of Competition, someone who's well versed in how long these investigations could go on and with what right they take. So the way in which the FTC is pursuing Microsoft, does it seem significant to you?
I think it's very important. The Microsoft case brought by the Department of Justice in the late 1990s was critical to the expansion and growth of the internet. Many of the things that we benefit from in competition on the internet are specifically because of that earlier case.
What's interesting is, of course, we've heard back from the Microsoft Deputy General Counsel, Rima Aleli, who put on LinkedIn saying on behalf of Microsoft, the FTC Inspector General, to investigate whether the FTC management improperly leaked confidential information about a potential antitrust investigation. How do you see these sorts of investigations evolving and becoming publicly known before indeed Microsoft has a chance to ultimately lead the way here?
I'm extraordinarily skeptical about whether or not the agency there would be some kind of leak from the agency. That's extraordinarily unusual. Third parties, however, who receive civil investigative demands can disclose whatever they want. And maybe this is a situation where one of those parties disclosed information to the press about the request they had received from the FTC.
Of course, this is wide-ranging, it would seem. Bloomberg initially reporting on how it's going to be focusing on the way they intertwine their operating system and also their dominance in cybersecurity. Now the information talking about the OpenAI Microsoft deal. I want you to just take a listen to a conversation I had with the AWS CEO yesterday, Matt Garman, talking about how he'd like to offer his own AWS clients access to OpenAI models, but can't at the moment. Just take a listen.
I believe that we would love OpenAI models inside of AWS. Absolutely. It's we listen to our customers, and if that's something that customers want, we're absolutely game. Obviously, with a partnership, it takes multiple sources, and there's probably some complexities in there, as you allude to. But I think in the fullness of time, it likely is the case.
So therein lies some of the issue that maybe the FTC is investigating. This relationship with OpenAI and Microsoft, and whether it should be indeed broken open a little. It seems as though Matt Garman is positive that it will. Do you think that ultimately that will be done by self-regulation or actual FTC regulation?
No, I think the FTC is going to take a serious look at this relationship and the potential of that relationship to foreclose other forms of competition, other rivals. They're going to take a very close look at the nature of the agreement between OpenAI and Microsoft.
Do you think, though, that a lot of these cloud companies are having particular relationships with some of these very powerful generative AI models? Is that something that's generally going to be looked at across the board?
Yes, but it's always important to realize that Microsoft is dominant. They're dominant in cloud computing. They're dominant in certain software categories, vital software categories. And when a firm takes that dominance and extends that dominance to other product markets and forecloses competition in those markets, that violates the antitrust laws.
I feel though AWS would have something to say about Azure being all that dominant. They feel that they own a lot of the market. I'm sure that even other areas, Oracle feels that they got a key stake, Google as well. Can you have broader provision, less oligopoly-like cloud operations when this ultimately is incredibly expensive to offer?
I think that's one of the considerations that's kept in mind here. But we see many markets where there are not contractual arrangements that foreclose competition, where competition flourishes. And it's specifically those arrangements, like the arrangement between Microsoft and OpenAI, that will receive intense scrutiny. Especially because Microsoft is so dominant in cloud computing.
And dominant in cybersecurity, and in many ways, the reporting is such that this investigation started because some of the failings to do with cyber when it came to federal provision. Is that what sparked all of this, David? How do you think this is going to weather a transition into a new administration?
First of all, that suggests one of the real advantages of having a federal trade commission that deals with both consumer protection issues, the failure to provide cybersecurity adequately, and competition issues. I think this is an investigation that won't lose any steam in a new Trump administration. The kinds of legal issues here about when bundling is legal and illegal, I think there's a pretty strong consensus between Republican and Democratic antitrust enforcers. So I expect this investigation will go full throttle in the next administration.
David Balto, former policy director of the Bureau of Competition at the FTC. Thank you for your time. Now coming up, David Ellison is eyeing big changes to Paramount. More on that next. This is Bloomberg Technology. now for Talking Tech. First up, big changes may be coming to Paramount Global. According to sources, expected CEO David Ellison is exploring combining Paramount's TV units, investing more into streaming, and overhauling its top management. This is all expected to come when its merger with Skydance is finalized next year. Plus, Meta is looking towards nuclear energy to fuel its AI ambitions. The parent company of Facebook is asking developers to submit proposals to deliver 1 to 4 gigawatts reactors starting in early 2030. For scale, 1 gigawatt of electricity is enough to power 750,000 typical homes. And billionaire Xavier Niel's Iliad is set to sell half of its data center business to French infrastructure fund InfraVia Capital Partners. And the company is in exclusive talks to sell 50% stake in Iliad's OpCore for a total enterprise value of $904 million. Coming up, plenty more when it comes to data centers. My conversation with Amazon Web Services CEO Matt Garman on the company's major plans for AI. What's going to power it? That's next. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets that are at new record highs. The NASDAQ, the S&P 500, Apple's at a record, Amazon's at a record. You've got across the board the key companies that are coming out with earnings also raising to new record highs. Marvell coming out with its numbers that beat and raised, and we see it at a record high, and so is Salesforce. So move on as the NASDAQ 100 goes up 0.9%. We in large part are being helped by the latest numbers that out of CRM. Salesforce up 9%. Of course, it's third quarter earnings looking strong. This is as AI Agent Force comes through with a bang. They're adding 1,000 people to go out and sell this in particular, but we're seeing 8% growth in their earnings as well in terms of revenue. Let's break it all down with Bloomberg Intelligence analyst Anurag Rana. And I mean, many were questioning the valuation, the share price of Salesforce going into this earnings report, but they managed to vindicate it.
Yeah, Caroline, if you look at the results, the margin number was above expectations. But other than that, everything else was generally in line to what people were expecting. But I think the real push is people are really buying Mark Benioff's Agent Force story and the potential for that down the road to add revenue. It's not going to add revenue for the next 12 months to a point where it's going to move the needle. But I think after that, it should start to add, a good momentum to the overall revenue base.
Executive VP Mike Spencer saying it was, quote, a good number of the amount of deals that they signed with Agent Force. What do the good numbers look like, do you think?
Yeah, on the call, they said something about 200 deals or so, but at the same time, those 200 deals are not moving the needle when it comes to the bookings data. And we don't think that's going to happen. I think what you're seeing right now is a lot of value realization by the street that says, okay, at the end of the day, Salesforce is going to be a net beneficiary of Gen AI. I think this is the biggest discussion around almost the entire software space is what companies will benefit over the next 2 to 3 years or longer, and which one's going to be, not so much. And I think that's where Salesforce is. People are getting convinced that, they have their act together.
Because previously people were worried about that act, right, Anurag? We were seeing a concern around Mark Benioff's desire to keep on doing M&A, perhaps not thinking about profitability. They made big layoffs. They've streamlined the business. But then they're still splashing $344 million on Zoomin startup acquisition. Do you still like them adding on, tucking in where they can?
Yeah, the small acquisitions don't bother me one bit because that doesn't really impact the free cash flow. It's really the big ones that worry because that's going to change the momentum of the margin improvement. We just looked at it the day he announced that it's not going to be any more M&A, it's going to focus on margins. Just from that point till today, their margins have gone up by 10 percentage points. That's a very big number by any standard. And frankly speaking, when you look at a company like Microsoft or Oracle, Salesforce has a long way to go before it can reach those numbers. So there is still more potential for margin improvement. As long as they can get their organic growth rate up, people will like it.
Operating margin, I think, coming in at about 33.1%. Anurag, what of Microsoft? What of competitors in this agent offering and co-pilot offering that we hear so much about?
Our initial vision is to build a smart city that changes how people think about urban living. We always think to push the boundaries, how we can shape our future.
So when you look at Salesforce, two of their biggest products are Sales Cloud and Service Cloud. Service Cloud is a lot to depend on people who are looking at back office and customer support functions. This is where the agents are really going to benefit, because think about it. If you are calling a human to get transaction done or taking care of your work, it's going to cost the company or the end market, whether it's an airline or a phone company, a lot of money. If you can get that done through an automated chatbot that can actually execute the operation for you, that can change your phone plan without getting a human being involved, that can return your stuff and refund you the money without getting any human involved in it, that's a very big cost benefit for the end customer. And that's
Thank you so much. Talking of application of AI, Amazon is trading at a powerful new chip arrays, a large language model to compete with leading rivals. And Matt Garman, AWS CEO, the massive cluster of homegrown chips he says will quintuple the processing power for its AI partner Anthropic. Take a listen.
That is the first innovation, is our Amazon designed custom silicon that gives us real performance for generative AI capabilities. And then we build these together with high performance networking that we also build in-house. And then of course there'll be cooling and heating and power that we need to go build the data centers. But it really starts with that silicon down at the level, and we innovate on the entire stack of AI to make sure that we can control everything that goes into those clusters.
Can you talk to us a little bit, compare and contrast here? This is about less dependency on NVIDIA GPUs to many ways, doing an alternative for your clients. What sort of cost saving will clients get? What sort of energy and efficiency will they get?
Yeah, well, first of all, I think we like to think of it as a supplement to NVIDIA GPUs. NVIDIA has a fantastic product. That team has done an outstanding job executing. And we think that the vast majority of workloads are going to continue to run in NVIDIA processors for a long time. But customers want choice, and they want choice that can give them some lower cost options. And we think that for certain workloads, for many workloads, Trainium 2 can give customers 30 to 40% cost performance benefits over today's GPU powered instances. And so we think that that's a huge win for customers, particularly as they're looking to lower the cost of generative AI workloads. But we'll be great partners with NVIDIA and continue to lean in on building great technologies together with them for a long time.
Trainium 2 available, Trainium 3 in the works, and all of this is, as NVIDIA at the moment, it's estimated, has about 95% market share. Do you agree with that sort of number they have, and what sort of area do you think that will come down to?
Yeah, I mean, I think it's probably higher than that. I think the vast majority of workloads in generative AI today run on NVIDIA technology, and they've absolutely been the leaders in that space. But we do think we hear from customers that they want choice. And just with our processors, where we're tight partners with Intel and with AMD, but we decided to go build a general purpose processor called Graviton, and it's been hugely successful with our customers. But we also provide lots of Intel and lots of AMD processors in our cloud today, and those businesses continue to grow. So I expect that our usage of NVIDIA will continue to grow from our customers, and that choice is really going to be powerful. And as you see this explosion of generative AI usage, I think there's going to be plenty of business for multiple different people to be successful.
A key partner is Intel. How concerned have you been about the change at the top?
Oh, it's okay. I wish Pat the best. He's I know Pat, and he's been a good partner of ours. But we've been partners with Intel for a long time. It's been 18 years since we launched our first Intel instance when AWS and EC2 first launched, and we'll continue to be great partners with Intel, and they have a great technology team there, and we look forward to continuing to roll out the latest technologies from Intel for our customers to be able to use.
And you've been continuing to roll out, as you say, NVIDIA offerings. Last time you were on, we were talking about Blackwell, of course. Many have been frustrated, perhaps by some slowness to market there. When do you anticipate that Blackwell will be unfolding, and how difficult has it been to ensure the supply side is there?
Well, they've obviously had some manufacturing things that they're going through, but we're very excited about it. I think the early returns and the early looks at Blackwell look fantastic. We expect almost a 2.5 times gain in the compute power that you get from Blackwell that we saw from H100s. And so I think it'll be a really material jump for customers once we get those out. And I think those will be early next year, and we're excited about putting them in customers' hands, and we'll get them out there as soon as they're available.
Investors, though, they find it wild, this whole frenemy existence that's going on. you truly think that investors here think, oh, we want to see NVIDIA dependency as well as AWS having its own offerings? Is that something you think everyone can swallow, or do you think ultimately there will be a broadening out other than just NVIDIA winning all?
I do think it's a partner. Like, if you think about AWS, we started from the very beginning thinking about this partnership mindset. And we built the entire business around AWS, thinking about how AWS would have services and our partners would have services, and that there's plenty of space for all of us to really grow and build our businesses. And that is true for software providers. It's true for service providers, and it's true for technology providers. And so I think that we've proven time and time again over the last 18 years that AWS can have products and our partners can have products. And then as we make them all available, that the whole pie gets bigger. And so I think there's plenty of opportunity for both. And so it really isn't. I think it makes for a fun narrative that it's either or, but we're great partners with NVIDIA. We will continue to be. And this is all about making the pie get bigger.
Fighting the frenemy discussion, my conversation with AWS CEO Matt Garman. Coming up, plenty more on AI and the investment opportunities. Lily Lyman, _VC managing partner, going to be joining us. This is Bloomberg Technology.
You don't start a startup if you want to sleep at night. We are building the tools that will enable users to transform their industries. I want to get to a world where quantum computing is the way we're solving all of the hard problems.
Investment strategies of major multi-billion-dollar firms and small specialized funds diverging the venture asset class heading into the new year. According to Lily Lyman, who is managing partner at _VC, joining us from Boston. You really think about early stage seed investing, and particularly when it comes to B2B software, Lily. I'm interested in this bifurcation that you're seeing. Talk us through the theory.
Yes, great. Well, Caroline, it's great to see you again. Thanks for having me. And as you said, I'm Lily Lyman. I am at _VC. We are a community-driven early stage venture firm based here in Boston.
Lily,
we invest.
I'm terribly sorry to interrupt, but we're going to have to go to some breaking news happening here in the New York City. The NYPD holding that news conference on the shooting death of the United Healthcare CEO, Brian Thompson. Listen in.
From behind and fired several rounds, striking the victim at least once in the back and at least once in the right calf. Many people passed the suspect, but he appeared to wait for his intended target. The suspect fled, first on foot, then on an e-bike, and was last seen in Central Park on Center Drive early this morning. The victim was removed to Roosevelt Hospital, where he was pronounced. We've been in touch with his family, his friends, and his colleagues, and they are very much in our thoughts and prayers at this hour. The full investigative efforts of the New York City Police Department are well underway, and we will not rest until we identify and apprehend the shooter in this case. The women and men of the NYPD take enormous pride in the work that they do each day and each night to drive down crime and violence in our city. Right now, we are asking the public for your help. If you have any information about this case, call Crime Stoppers at 800-577-TIPS. We have increased the reward in this case to $10,000. I want to be clear. At this time, every indication is that this was a premeditated, pre-planned, targeted attack. Millions of people will be enjoying the tree lighting tonight, among other holiday events, and the NYPD will be out there with them, keeping them safe. For some preliminary details about today's tragic incident, I pass it over to our Chief of Detectives, Chief Joe Kenny.
Thank you, Commissioner. The information I'm about to give you is preliminary as our investigation is continuing. This morning at 6:46 a.m., patrol officers from Midtown North Precinct responded to a 911 call of a person shot in front of the Hilton Hotel located at 1335 Avenue of the Americas. This is between West 53rd Street and West 54th Street. At 6:48 a.m., officers arrive and find the victim, Brian R. Thompson, a 50-year-old male, on the sidewalk in front of the Hilton with gunshot wounds to his back and leg. Mr. Thompson was removed by EMS to Roosevelt Hospital, where he was pronounced dead at 7:12 a.m. Mr. Thompson is the CEO of United Healthcare and resides in Minnesota. Detectives from Night Watch, Midtown North Detective Squad, and Manhattan South Homicide responded to the scene and began their investigation. What we know is that the shooter arrived at the location on foot about 5 minutes prior to the victim's arrival. He stands alongside the building line as numerous other people and pedestrians pass him by. From video, we see at 6:44 a.m., the victim is walking alone towards the Hilton after exiting his hotel across the street. We believe the victim was headed to the Hilton Hotel to attend the United Health Group Investors Conference that was scheduled to start at 8 a.m. The shooter appears to be a light-skinned male. He's wearing a light brown or cream-colored jacket, a black face mask, black and white sneakers, and a very distinctive gray backpack. The shooter steps onto the sidewalk from behind the car. He ignores numerous other pedestrians, approaches the victim from behind, and shoots him in the back. The shooter then walks toward the victim and continues to shoot. It appears that the gun malfunctions as he clears the jam and begins to fire again. The shooter then flees on foot northbound into an alleyway between 54th Street and 55th Street. Once at West 55th Street, the shooter continues to walk westbound on Avenue of the Americas, where he gets onto an electric e-city bike and rides northbound on the Avenue of Americas towards Central Park, where at 6:48 a.m., we have the shooter riding this bike into Central Park at Center Drive. At the scene, we recover 3 live 9mm rounds and 3 discharged 9mm shell casings. The motive for this murder currently is unknown, but based on the evidence we have so far, it does appear that the victim was specifically targeted. But at this point, we do not know why. This does not appear to be a random act of violence. We are seeking information from the public to help identify the shooter. As the commissioner said, we have upped the reward up to $10,000 for information. You're urged to contact Crime Stoppers at 1-800-577-TIPS. All information will be kept anonymous. Thank you very much.
All right, well, we're going to open up to a couple of questions. We're going to start off with Shimon.
In our lifetimes, we cover the distance from Earth to the Moon. It takes a global network to harness the moon's possibilities and build the lunar economy.
CNN.
So it's about an hour and 20 minutes before the start of the conference. Is there any indication that he was going to meet someone? Because it's pretty early. Is he on his way to meet someone there at the conference?
He leaves the hotel dressed like he's going to be attending the conference. We're working with his co-workers and other people that he planned on attending the conference with to get that information. But as of right now, he's in charge of the conference. So we believe he was getting there to help set up.
We know where that city bike is now. Does he dock it or does he keep riding it?
We're still tracking video. The last we see with him on that bike is in Central Park.
Is there a way to track that bike?
There are GPSs on those bikes. We'll be working with the company.
AJ Burkett.
Chief, were any words exchanged? If so, what were the words? And I'm told a cell phone was recovered in an alleyway on his escape route. Does that appear to be connected to the suspect?
We're working through that cell phone. Obviously, we'll be processing it forensically. And as far as words being exchanged, we do not have audio of the incident. We only have the regular video.
Nothing from witnesses?
Nothing for, well, there was one witness standing right next to the victim when he was shot. We're still trying to identify that victim. Excuse me, that witness.
We're going to go to Aaron Katursky.
Thank you. Chief, was he checked into the hotel across the street alone? Was he in the city alone? Was he accompanied by anybody? Did he have any known enemies or anyone that you've been able to find so far?
Like I said, we're reaching out to law enforcement in Minnesota, and we're also interviewing his co-workers and family members to see if there have been any specific threats against him in the past. As far as who was he in the hotel with, we're doing a search warrant in his hotel room right now. That might lead us, give us some more information.
All right, we're going to go over to Dean Moses.
A couple of questions. One, based on the surveillance we've seen of this individual, do you feel like he's professional? You mentioned that he did the bullet spell. Do you feel like this was a professional individual who took his man's life? And also, will it affect in any way 3 lines tonight?
I'll answer the part about whether or not he's a professional. That We have no way of knowing that. From watching the video, it does seem that he's proficient in the use of firearms, as he was able to clear the malfunctions pretty quickly. But as far as the tree lighting, I'll leave that to Chief Magic.
Yes. Good morning, Dean. Just really quick, this incident will not affect the tree lighting. The tree lighting is slated to start at 7 p.m. The show, the actual lighting of the tree will be close to 10 o'clock, actually 9:55 p.m. We will have a massive police presence out there around Rockefeller Center from 52nd Street all the way down to 47th Street. We will have plainclothes out there, a plainclothes detail out there. We will have our CRC assets, our strategic response group assets. We will have our intel division out there, a lot of assets out there to make sure people can come out and have a good time. And we're going to have additional police officers in the subways as well, so people can take mass transit to make it easier to travel into the city and enjoy the tree. This is a terrible event, but we're going to go on, and people are going to enjoy the tree lighting tonight.
All right, we're going to move on to Marsha Kramer.
I wonder if you could tell me, the mayor said that there was evidence recovered at the scene that would indicate that this was not a random event. I wonder if you could tell me what that evidence was. And by looking at the gun, it appears that there's a silencer on the gun. Was there a silencer on the gun? And does this indicate not only that it was premeditated, but this is somebody who knew his way around guns and might have been a professional?
Once again, we won't know that until we complete our investigation and identify the shooter or recover that firearm. You see a glimpse of the gun in video, so we're not able to make a determination on whether or not a silencer was used on that quick glimpse of video. We can't tell from that little glimpse of video. I'm not going to commit to saying that at this time. That would be part of our investigation. There's a cell phone recovered in the alleyway, and once again, we will process that forensically and see if it comes back to this shooting.
So you don't think that the cell phone was part of Brian Thompson's?
Once again, this investigation is less than 5 hours old. That will be part of our investigation.
Joe Marino, New York Post.
Chief, do we know when Thompson arrived in New York City? My understanding is he was staying close by to the Hilton, but not at the Hilton. And has anything in the reverse video cameras indicated that these two individuals crossed paths at all?
As of right now, based on the current video that we do have, it doesn't appear that they crossed paths, and he arrived in New York on Monday.
All right, we're going to take 2 or 3 more. We're going to go Rocco, Daily News.
Chief, did he typically travel with a security detail? And even though it's early, is there anything to indicate that there had been issues with, let's say, a patient who was denied coverage, either back in Minnesota or more recently, someone who lives here?
From speaking to other employees that traveled with him to New York, it doesn't seem that he had a security detail. He left the hotel by himself, was walking, didn't seem like he had any issues at all. So I don't think he did not have a security detail.
As far as denied coverage, I know that's typically an issue with these major companies. Any reason to believe he had been the subject of a threat?
Once again, we're looking at everything. We're looking at his social media. We are interviewing employees. We are interviewing family members. We will be speaking to law enforcement in Minnesota.
We're going to do 2 more before we wrap up. Shayna?
Oh, sorry. I was just going to ask if any cursory look at any social media, whether it's the company, whether it's his personal social media, his family's, is there anything obvious that sticks out at this early stage in the investigation?
We have not uncovered anything at this time. The investigation is still too early.
We're going to go last question over here with Jake.
How's it going? With the suspect still at large, last seen in Central Park, are you urging New Yorkers to avoid the park? Is the NYPD deploying its drones? I know they recently started doing that in the park. And then also I was wondering, is there any indication when he gets this city bike that he's a city bike member? It's like sometimes if you're not a member, you can pay to use it. I don't know if you're able to tell on surveillance.
The chief of detectives will answer the part about the city bike. But in terms of we're encouraging New Yorkers to go about their daily lives and their daily business, but to be alert. We put the picture out. You're putting the picture out. We want people to take a look. If they see anything suspicious, if they hear anything suspicious, we ask them to call 911 and reach out to our detectives. With an incident like this, of course, we put a heavy deployment into Manhattan. We put additional resources out. We have the drones up. We have aviation out. We have K9 out. When an incident like this happens, we don't spare any expense. We put all of our resources out there to support the chief of detectives' mission and to keep New Yorkers safe. So we will have a massive presence out there around the tree lighting. but throughout Manhattan as well until more information develops and we're able to support the chief of detectives and what he needs to make a quick arrest.
As far as where he got the city bike, we're still working that through. Like I said, we're pulling video from numerous locations, numerous sources, and we have him on our timeline walking. And what we're very fortunate is he has that very distinctive gray backpack on. So we see him on one video clip walking, and then another source of video, him riding that bike. So we don't have video or witness confirmation on how he obtained that bike. A cell phone was recovered. We will confirm that later on down if we, do our forensic examination.
Thank you, everyone. This concludes our press conference. Thank you for your time and attention.
Our initial vision is to build a smart city that changes how people think about urban living. We always think to push the boundaries, how we can shape our future.
That was an update from the New York City Police Department on the fate of detectives Joe Kenny, alongside, of course, Chief of Department Jeffrey Madry and the Commissioner, New York Police Commissioner Jessica Tisch. All of this giving the update. New York PD is reiterating that Thompson's shooting was premeditated. They're not sure why Thompson was targeted in particular. They're working on tracking the location of the city bike that the perpetrator has been seen riding, last seen in Central Park. The shooting will not the Rockefeller Center tree lighting, and you heard time and time again the comments coming to try and make sure that everyone feels safe and secure as they do indeed attend that using mass transit and the amount of police officers that will be throughout the subways and on the streets of New York following the shooting. New York PD also saying that they recovered a cell phone from a nearby alleyway and they will be doing some forensic testing on that. But ultimately, they're saying their shooting of Thompson was a targeted incident. United Health Group itself has said that they're working closely with the NYPD. And all of this, a tragic circumstance around Brian Thompson, a long-time executive of United Health Group. Of course, he was focusing on the insurance part of the business, fatally shot in Midtown Manhattan early Wednesday morning around 6:40 a.m. is what the NYPD was telling us. 50 years old, and he was shot outside the New York Hilton Midtown. That was indeed the company was hosting its Investor Day, according to a person familiar with the matter. Now, the early reports, as we've said, and the NYPD has just corroborated that this was indeed a targeted attack with 2 shots to the back and indeed 1 to the leg. Upon Thompson's arrival, the alleged attacker was waiting for him and shot the executive from about 20 feet away before fleeing on foot and then mounting a city bike. The alleged shooter was still at large, and as you heard there is a $10,000 reward to find him. Thompson then had a gunshot wound to the chest. He was taken to the Mount Sinai West in a critical condition where he was pronounced dead. The NYPD has said there's no rest this time. They're continuing on this active investigation, as we did indeed hear from NY Police Commissioner Jessica Tisch. For more, follow Bloomberg throughout the day on the latest on the passing of Brian Thompson, United Healthcare CEO. This is Bloomberg.
Architecture is about creating movement and motion. There's a huge community that is working together to bring it further. AI technology is evolving every day, unlocking the new possibilities.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Stocks cool down. Today's number, $6.2 million. That's how much a crypto entrepreneur paid at a Sotheby's auction for a banana taped to a wall. Ed, what did the banana say to the vibrator? What? Why are you shaking? She's going to eat me. How are you, Ed? It's time for banter.
I'm doing pretty well. How are you? Where are you? I have never seen this background for you before.
I'm in the guest room in our rental in Belsize Park, which is a suburb of London, which we are moving out of back into our real home in Marylebone.
Oh, okay.
Which I'm hoping will lift my mood from a 2 to a 3, because I'll be near Marylebone High Street and I'll get to walk.
Well, welcome to an extraordinarily special On the Tape. Dan, Nathan, Guy Adami, but we're joined by my friend, Dan's friend, and obviously the friend of the entire cryptocurrency community, the CEO of MicroStrategies, Michael Saylor, is joining us. Michael, thank you so much for being here.
Yeah, thanks for having me, guys.
And we saw Michael earlier in the week, Anthony Scaramucci's book party. You obviously wrote the forward for that. You were funny in your comments saying that, Anthony wrote this book, and I'm using sort of air quotes in writing it. Anthony was part of the book, but he said at the end of it, you should have 1 to 2% of your portfolio in Bitcoin. And after basically, writing this book, he came up with 2%. And you made the point, wait a second, if you're really passionate about this, 2% is sort of a rounding error. So let's start there.
Yeah, well, I think that if you read an entire book of investment advice or financial advice, you don't want someone to end the book saying, I don't have a solution for 98% of your problem, but here's an insurance policy. 1 or 2% is like buying an insurance policy, but 20, 30, 40%, 50%, 75% is like solving the problem. So I just said, like, I don't think you're going to come up with 50 good ideas. And I think that the whole idea of diversification makes sense when you don't know the answer, but you don't want to make a mistake. But I think in the field of engineering and in many fields in life, it's like when your kid is a good basketball player, you don't say, I think you should split your time between archery and jogging and swimming and basketball and football and hockey and 16 other things just in case. You tell them to focus on basketball, and you build the plane out of aluminum, and you don't diversify the steel beam into clay and bronze and balsa wood, right? If there's an answer, there's an answer, and you just tell someone the answer. When you don't know the answer, you're like, yeah, we'll go to Vegas and gamble and pick anything, but, don't bet more than 2% of your money, right? Don't. So my point really is, there's a disconnect between giving someone a piece of advice to make their life better and then saying, but I 98% don't believe in it.
All right. So let's go to the beginning. And Dan mentioned how we met, and I'll let the audience know. So I think you had just sort of come to the realization, you spent some time working on Bitcoin and coming to the conclusion that this made a lot of sense. You joined Morgan Brennan and me. I was able to sort of co-host Power Lunch with her. It was one of your first interviews you did sort of in a meaningful way. And you sort of outlined this vision for MicroStrategies and what you're going to do. I think it's now 3 or 4 years later. My math is a little squishy, but let's just sort of split hairs a little bit. And that plan is absolutely coming to fruition. As we sit here, you have now over 400,000 Bitcoin on your balance sheet. I want to say at an average cost of about $58,000 or so. You can correct me if I'm wrong, but everything you thought was going to happen is sort of playing out. So let's start there. And, maybe you can talk about some of the things that you didn't see happening, you did see happening, some of the pitfalls along the way. Give us sort of that calendar, that sort of timeline.
Yeah, I think the middle of 2020, we're running a $500 million business with $500 million in cash, generating $75 million in cash flow a year, growing 0 to 5%, competing against Microsoft. Lockdowns hit. Our stock has 0 options, $2 million of liquidity a day. The options are worthless. The stock is worthless. We have no investor interest. We're stuck in a competitive trap. There's no way to crawl out of the competitive trap. We've got $500 million in cash generating 4% interest, and all of a sudden Jerome Powell cranks that down to 0% interest. And then everybody's locked in their home, and I'm staring at, and then I watch all the Magnificent Seven stocks double. And then you realize that if you're sitting there, all your capital is going to be siphoned off by the Magnificent Seven. All your human capital is going to be siphoned off by the Magnificent Seven, right? Even if you have a good product, it won't be a good product in 5 years once all your engineers quit. And so we're kind of stuck in a trap. So at that point, you have 3 choices. You have a fast death, just sell the company. And a lot of people do. 99%. I had 100 competitors, guys. 99 of them, or actually all 100 of them, sold themselves. Right? You just exit. Or it's slow death. I have my $500 million. I'm just going to start to pay all my employees massive cash bonuses to not quit, retention bonuses. But you're just going to go through the cash at some point. You're not going to be able to get out of your hole. You're going to linger on as a zombie. Or you take a risk. And the risk is a transformational acquisition. It's like, when you buy VMware, it's like, can you buy a company that's growing 20 to 40% a year, that's a monster world beater company? And can you buy it for cash or buy it for stock? And maybe you have a new lease on life. And so I looked at, option 1, I looked at option 2, and I thought, well, is there some monster company we can buy with our $500 million in cash? Because right now it's a liability. And obviously I couldn't find one. But then I looked at Bitcoin and I thought, Bitcoin looks like Facebook for money. It looks like the global monetary network. It looks like the dominant. It looks like the Google or the Facebook. And so I'm like, what's the big tech monster network for money? And Bitcoin looked like that for me. So I thought, hey, maybe I can do a $500 million acquisition. I buy 500 million of Bitcoin. What if you could buy a company growing 60% a year at 1 times revenue with cash that you don't need? That was the idea. And it was kind of out of frustration and desperation, but it was a strategic Hail Mary, because your choice is just sell the company, give up. And the company would have been sold for $6 a share in enterprise value. Okay, $6 a share after 30 years of life. So we do that. We get to the 500 million. Bitcoin rallies, the stock doubles, the stock triples. Now we just have an opportunistic run. We discover the convertible bond market, and they want to give us $650 million in cash, pretty much for free.
For free, not pretty much for free, for free.
If I came to you and said, I'll give you $650 million, it's 75 basis points, go invest in something. Can you come up with an idea for something to invest in that yields more than 1%? Probably. If you can't, right, you're not in business, right? Probably you can't. So we did that, and Bitcoin rallied again, and all of a sudden we were able to raise $1 billion for 0. Okay. And then we realized, well, we might as well take another 500 million, and we took a $500 million loan at 6%, and we thought, well, Bitcoin's gone up 60. We'll borrow at 6. We'll loan at 60. We'll capture 54. And it moved around. And then at some point, some banker called me and said, you can do this ATM where you can actually sell equity in the market. I said, you're kidding me. Really? That's possible? And actually, the greatest innovation of the past 30 years, guys, in the capital markets is the ATM shelf registration of equity, because it allows an issuer to sell shares pari passu to an investor. You're basically on the same footing as anybody else. It's a fair thing. And for my entire career, if we wanted to sell $100 million of equity, our stock would get hammered down 20%. And so it felt pretty good to not get hammered 20% and be able to sell into the market whenever you want. And so now we hit upon this this new stage where we realize we have a commodity that returns more than the S&P index that that we can buy by selling our stock. So if you know, if you're an investor and I give you a return higher than the S&P, how much capital are you going to give me? Infinite. So we started doing that. We sold $1 billion of that. And the short of it is we went from a $500 million investment to $10 billion of capital raised, you know, and the stock, you know, went up by a factor of 10 or 20. And then we got to 2024, and 2024 was a, you know, by the way, I skipped the crypto winter where everything crashes from 66,000 to 16,000, but this is a half-hour podcast. So I'll just say it was a roller coaster. We went up to 66, down to 40, up to 66, down to 16, back. But and that's all very colorful. But the real point is we're buying Bitcoin with equity, with debt. We're refinancing the debt. We're at all points, generally, we're doing it in an accretive way. And we get to 2024, and then we discovered the value of volatility. I mean, really understand it. Because in January of 2024, Bitcoin isn't an asset class. And the second week, the SEC approves those ETFs. And then you start having the snide comments like, well, now we don't need MicroStrategy anymore. They're like just a proxy. They're like a, you know, a clumsy ETF substitute. We'll just put our money into the ETFs. But what happened at the same time was the halving was coming, and all of the investors, the vol traders, went through a secular rotation, and they started selling the Bitcoin mining stocks and looking for something else to trade. So if you track the liquidity in the options market and in the equity market, there was a major shift in Q1 and early Q2 where a lot of the volatility in the options traders and equity traders, they basically hopped off a dozen Bitcoin mining companies onto MicroStrategy because the Bitcoin miners were going to the halving where their revenues get cut in half. So when that happened, our options interest exploded and we became the number one options market. When the SEC approved the ETFs, they didn't approve options. Okay, so today our options market is like $95 billion. Our options market is the same size as our market cap. And then we discovered that the real strategic opportunity we had was we can construct a balance sheet of permanent capital with leverage. And when you take Bitcoin and make it 100% of your stock, you're going to trade probably, if Bitcoin is trading with a 60 vol, you're going to trade with a 75 vol just because of the uncertainty of what the management team is going to do. Like I have the option to sell equity or not sell equity, or we might do something or not do something. I have the option to do debt or not do debt. That option is going to move you from 60 vol to 70 or 80 vol. Then if you actually execute the option by selling equity at a premium or by issuing convertible bonds, you move to 90 or 100 vol. So all of a sudden, we had an equity trading with 100. I think today it's like 120 vol, basically double Bitcoin equity. And now here's the big idea, right? The S&P is 15 ARR, 15 vol. Bitcoin is 60 ARR, 60 vol. It has been that way for 4 years. We take a company with permanent capital and we create something which is 100 or 120 vol, 100 to 120 ARR. Okay, now that attracts all the options traders, all the arbitrageurs, all the Bitcoin maximalists. It becomes hot money. You know, the call rate, if you hold a dollar bill for 30 days, you're getting SOFR at 30, you're getting 480 basis points or something like that. If you hold $1 million worth of the S&P index for 30 days, you can get like 15% interest by selling the 30-day calls at the market. If you hold Bitcoin, IBIT, for 30 days, you couldn't sell the options until just recently, but now you can sell them and generate about 100% interest. If you sell the MicroStrategy call option at the market, it's 220% interest rate. Okay, just to hold the share. And so all of a sudden, what we've done is we've created a levered flywheel on top of a product which is already 4x as volatile and 4x as performant as the S&P. The result is our liquidity explodes, our options interest explode, and we do a convert bond in Q1. A week later, we do another convert bond. That's the first time in history anybody ever did 2 convert bonds back to back, 2 consecutive weeks. Then we do another one in Q2. Then we do another one in Q3. Then we do $1 billion of ATM in Q3. And then we start to get into a groove and we realize that at the end of the day, the market's going to rally around some leader. And you're either going to lead in a decisive way or you're going to sneak around and apologetically be opportunistic, or you're going to hide and wait. And so we just decided we're going to lead. I mean, John D. Rockefeller decided to roll up the entire petrochemical industry, and he bought out all of his competitors, all of his customers, all of his vendors. And first he did it for cash, and they would say, okay, well, pay me this. He'd go to the bank, he'd borrow the money, and he'd give him the cash. And at some point, people in the industry said, Standard Oil stock is worth more money than the cash. And he just started issuing the stock. And Henry Flagler, of course, built Florida with Standard Oil stock. And so there's this point in the market where the market decides it trusts you and it wants to rally behind you. And we got to the point in October 30th, and we just said, look, we're going to put the question to our shareholders. Do you want us to basically build this business or not? And after 40 consecutive Bitcoin purchases, after laying the foundation of a Bitcoin, development company, after actually rolling out the KPI of BTC yield, which is, we just sold $1 billion of equity. It was backed by $350 million in Bitcoin. We bought back the $1 billion in Bitcoin. We captured $650 million in the arbitrage. That works out to 4%. That 4% is like a Bitcoin dividend to the shareholders, but we're going to keep it on the balance sheet, roll it forward, and reinvest it. Once we constructed that model, we just said, look, we're going to issue $21 billion of equity, and we're going to issue $21 billion of fixed income, whether it's convertible bonds or preferred shares or corporate bonds. And we're going to do the fixed income to stay levered. We're going to do the equity when it's at a massive premium to the underlying assets to capture the yield and to delever. If you want to get behind us on that, that's the plan. We put it out there. The next day, stock trades up. We outperform every Magnificent Seven company. We outperform Bitcoin. We outperform every Bitcoin company. Yeah. So the shareholders spoke. I mean, by the way, it's not a surprise to me. I was 95% certain they would like it because I meet with them and they were like, this is the most brilliant thing ever. Yeah, just keep doing this. So after that, we had a good week, and then November 5th came. And there's a red sweep, and all of a sudden you have a pro-Bitcoin White House, a pro-Bitcoin Senate, a pro-Bitcoin Congress, pro-Bitcoin cabinet. Bitcoin rages from 68,000 to 99,000. The short of it is we raised $10 billion in 4 years after our initial announcement, and that's like progressively work and learning. We're learning, and the market's learning to trust us. Right? We're building a relationship. My relationship's not just with my equity investors. It's with the convertible bond investors. You meet with a convertible bond investor, say, I saw you last quarter. I saw you, you yelled at me for this and this. I fixed this. I'll do this. We're partners together. I promise you I will do this. I'm not going to mess with your opportunity. I'm not going to hedge it. I'm not going to steal your trading opportunity. I will do this and this and this. The guy goes, well, and I'm looking forward to this future. The guy goes, thank you for your candor. $500 million order. 50. Like, if you have trust and people understand you, they'll give you your money. So what happened next is we raised $13.5 billion in 4 weeks. And if you look at my tweet, my tweet this morning is basically, we generated about a $9 billion plus gain for our shareholders in those 4 weeks. We're making hundreds of millions of dollars a day. It's tricky for conventional investors to understand it because you're not capturing shareholder value creation via GAAP accounting. because for two reasons. One, Bitcoin's indefinite and tangible, but two, in the history of 50 years of the capital markets, everybody's been on the US dollar standard, which is zero vol, zero ARR against the dollar. And this is the Bitcoin standard, 60 vol, 60 ARR against the dollar. We don't have the math, the accounting to keep up with that in the traditional system. And that's why we have to put forward things like a BTC yield, a BTC spread, a BTC gain. And those that understand BTC, they get it and they're long and they love it. And those that don't understand BTC or don't understand this or just aren't really interested in putting in the work, they just think it's sham crazy and they're just going to short it or they're just going to whatever. So that's where we are today, is from desperation to opportunistic to strategic to identity. At this point, we're a Bitcoin treasury company. I'm on a mission. My mission is I'd like to see the entire world recapitalize on Bitcoin. Every company, every family, every individual, every government. I think it's an economic protocol for prosperity. I think it's as important as English or fire or electricity or steel. I just think it's good technology. It's a good idea. We're reaching the fun stage. The next 4 years, I think, are kind of fun. We get to do a lot of interesting things to help people.
Michael, it's interesting. And Guy and I said this on Fast Money earlier in the week also. I've been in the business for 26, 27 years. I've never seen anyone take the sort of time to explain what they're doing, which seems somewhat non-traditional if you're speaking to an equity investor, which you were back in 2022 when you were on our podcast. Then you basically said some of the same exact things that you just ended that commentary with, of like what you'd like to see, companies do, what you'd like to see households do. And I guess if they listened to you back then, the outperformance relative to, let's say, the Mag 7, which you just described, would have been pretty astounding. Now, you also use the term traditional investors. When I look at the holders of MicroStrategy stock outside of you at almost 9.5%, I see Capital Group, Vanguard, Morgan Stanley, Jane Street, BlackRock, and State Street. Now, those 6 or 7 investors are usually the largest investors in most of the S&P 100. We can agree on that, right? So when you are speaking to them about what you just described to us, what do they think the end game is, right? Because a lot of investors have exposure to this who don't really understand everything that you just talked about. So what is the end game? When you listen to an Apple or a Microsoft or any of the Mag 7, they're laying out a 10-year plan, how they're investing their capital, where they see, their business going or the macro going. So what do you say to investors about what the end game is? You just described what your plan is right now.
Yeah, I think the end game is to securitize the entire asset class, securitize the asset class, and so when we say we're a treasury company, what we mean is we're the institutional bridge between a high energy, volatile crypto commodity, that thing we call Bitcoin, with 60 AR, 60 volatility. What that means is it's always going to be higher performance than the S&P index. It's always going to be more volatile than the S&P index. As it goes from $1 trillion to 250 trillion, as it merges, the S&P will adopt Bitcoin and their performance will drift toward it, and Bitcoin's performance will drift toward the S&P. But as long as we're sitting between conventional equity capital and this crypto capital, we can arbitrage the difference. And as long as we're sitting between probably 60 ARR, 60 vol, and the bond market is 6 ARR, 6 vol, 5.5. So you have fixed income, which is 5.5. You have equity, which is 15.15, and the traditional market. You have this raw energy source, which is 60.60 in the crypto economy, which is 24/7, 365. No one can stop it. Chinese, Russians, Africans, South Americans, people can panic sell 10 billion of it on Saturday night through one of the 14,000th exchange in the world, or 1400. So you've got this raw thing, and then you've got this traditional market. And what we've said to our investors, and I think they're starting to understand now, is so we're going to strip the volatility, strip the performance, strip the risk off of the bottom of the capital structure, give you like a 6 to 12% investment grade instrument to invest in, a 12 to 24% high yield instrument to invest in, a convertible investment that gives you 75% of the upside to 100% of the upside, but 10% of the downside. And then when we strip those performances and those vols via those fixed income instruments, you're talking like, say you raise 100 billion in capital. Well, you're grabbing 60 to 65% of the economic boost for the equity, for the MSTR equity. So when I sell 100 billion of fixed income, I'm going to tax $60 billion of boost onto 40 billion of equity on the MSTR side. That's how we get to 2x Bitcoin or 2.5 or 3. And of course, the real magic of the story is the baseline is Bitcoin is raw commodity. You either buy that on Coinbase, or Bitcoin is wrapped. You buy IBIT from BlackRock. That's the baseline. But it turns out most of the world doesn't want that. I mean, a lot of the world wants high voltage. They want 10x leverage. Susquehanna wants 10x leverage. Millennium, Soros, they want to be up there in the stratosphere. And then some people want, the MSTX, MSTU, those two ETFs raised $4 billion in a matter of weeks, no marketing. They want 4x, 3x Bitcoin. MicroStrategy is 1.5 to 2x Bitcoin. So some people want to be up there above the baseline. Look, if you believe in Bitcoin and someone can give you 2x Bitcoin and they can do it with intelligent leverage or with a balance sheet you trust, why wouldn't you want 2 times whatever you wanted, right? And then there's another world of crypto curious people. They're just tired and bored. How do you feel about a portfolio of 187 diversified preferred stocks that give you 520 basis points? And it's like, okay, you own the 16th tranche of the 18,000th regional bank, and it's like QSIP 199742. There's no volatility. You can't pledge it as collateral. You can't borrow against it. So there's a world, $300 trillion of board money that's waiting to die, getting 2-3%. And then there's another 200 trillion of hot money. MicroStrategy is just going to sell all of those instruments up and down the chain while we ignore the baseline. And I'll just make this one point. Like when you're arbitraging this, you're asking the question, well, how fast is it appreciating? So Bitcoin is plus 60. And let's just say because it's plus 30 to 60 versus the US dollar. And my long-term forecast is 29% for 21 years. So we're plus 30 to 60. Then the next question is, how volatile is it versus the dollar? Bitcoin's 60 volatile, but you can imagine it's going to be plus 30 to 60 more volatile. Then you ask the question, how fast is the investment cycle? If I borrow a billion or raise $1 billion of equity and I invest it in a real estate project, it takes 5 years, 1,500 days. If I invest it in Bitcoin, it takes 1 day. I'm running the investment cycle 1,000 times faster. And then the last question is, how accretive is the capital raise? So if I'm selling it at 3 times net asset value, you're capturing a 66% spread. The convertible bonds are capturing an 80% spread. When you sell a convert at an 80% spread and you do $1 billion of it, it literally means that you captured 80%, $800 million of capital gain on the day you did it. And you capture all of the capital gain for your shareholders forever on the 800 million. And so when you're raising 800 million and then you're investing it at 60% ARR or 30%, right? The amount of accretion is screaming. So what are we going to do? Well, we're going to do this $42 billion and then rinse and repeat and double it and double it and double it and double it. And you're going to say, like, well, where does it end? Well, I guess when we've taken 1% of the fixed income market, which is $3 trillion, and when we levered it up and we've got 10 billion. Billion, we bought 3 trillion of Bitcoin and we're trading at $10 trillion in market cap. We'll be growing 20% a year.
All right. So
that's the end game, right?
So here's my question to you. So, gold is an extraordinarily mature market, and I'm going to round up here. So gold right now is an 18 trillion market cap industry asset, whatever you want to call it. Bitcoin today is about 2 trillion. So that's 11%. Where should that ratio be? And then by giving us that ratio, we can back into a Bitcoin price.
Well, look, Bitcoin's going to go to 10x gold easy. Just keep in mind, right? A public company, it's got to hold a commodity on its balance sheet because it can't hold securities. So you've either got a choice of a digital commodity called Bitcoin, which is 60% ARR. Gold is 7%. Real estate is 10%. Bonds are 4%. And everything less than 15% doesn't beat the cost of capital. So the S&P sets the hurdle. So gold fails as a treasury asset for everybody in the world. Bitcoin succeeds. I think you could, if you call Bitcoin digital gold, it's 10x gold. But I still think it undersells Bitcoin, right? Because Bitcoin is digital capital. It's not just replacing gold. It's going to replace real estate, the S&P index, and any capital asset held by an institution or a wealthy family. So right now, wealthy families and investors don't use bonds or gold as a capital asset. They would use the S&P index or stocks as a capital asset. But banks and regulated corporations, operating companies, aren't allowed to use securities as a capital asset. They're knocked down. They don't want to use gold. It's not liquid enough and fungible. It's not liquid enough. And so they use real estate, and you got a REIT or a real estate development company. But real estate is, less than the S&P index and not volatile. If you give up the ARR and the volatility of the S&P, you're trading down. So that's not really a winner. And then you're stuck with bonds, and bonds are dead money, a liability. So, yeah, I think I've said before, Bitcoin, it should reasonably become a multi-$100 trillion asset class, right? My forecast is 13 million a coin by 2045 base case, upside and downside. I just expect another way to say it is it's 60% ARR at 60 vol. It's going to track toward 20% ARR and 20 vol when S&P is 15 over 20 years. It'll just step down as it approaches that target.
Okay, so here you go. So this is my final question, I promise. So let's just say President-elect Trump and his cabinet members and the Treasury Secretary all listening to this podcast. They just heard what Michael Saylor said. This is going to come completely out of left field. But what if they say, wait a second, this is basically property. What if they say the 400,000 Bitcoin on your balance sheet, eminent domain, Michael Saylor, the best interest of the United States for us to have them? Is that an existential risk? I mean, it's happened before. Thoughts on that?
In a communist or socialist state in Venezuela and North Korea and Cuba, they expropriate property. So if a government becomes communist or socialist, then they're going to take your property, I suppose. So it's an existential threat. But what I would say to them is the smart thing to do is think about money as bifurcated into currency and capital. And the US dollar is destined to be the world's reserve currency. And the smart thing to do is just normalize stable coins or digital currency and let banks and corporations issue US dollar stable coin like Tether And then that market will go from 150 billion to 10 trillion. And the US dollar will become the medium of exchange in North Korea, South Korea, Cuba, China, Russia, Africa, South America, and probably most of Europe. Literally, if you want the dollar to become the world reserve currency and move between 8 billion people the speed of light on Android phones, it's easy to do. Just normalize a digital currency with a digital assets framework. You will have $10 trillion of demand for treasury bills to back it. And then I would say, acknowledge that the world capital network right now is real estate and equity. And if you talk to any billionaire, no one is bragging about holding all of their wealth in cash or bonds. It's real estate, it's equity. And Bitcoin is the emerging world reserve capital network. The most intelligent thing you can do is just sell the gold, buy Bitcoin. It's a free trade. Gold was a good idea in the 19th century. No one thinks gold is going to be the capital network of the 21st century. So just trade the gold for Bitcoin. You'll have 25% of the Bitcoin network. You'll make $100 trillion on the trade. If you don't want to trade the gold, just issue currency. It's a little bit of money. It's free. Print money. Buy 25% of the Bitcoin network. When the Chinese billionaires, the Russian billionaires, the Europeans, when they all basically start buying Bitcoin, the big winner will be the United States. It's not more complicated than you can have Louisiana, California, and Alaska for free by writing a little paper check, or sell the past, sell the stupid gold. Gold is going to, by the way, gold is going the way of silver, which went the way of glass beads, which will go the way of copper tokens, which goes the way of the giant stone coin of the Yap people. It's going to be demonetized because you can't zap $1 billion of gold from an Android phone to an iPhone in one split second. It's not complicated. Everybody's going to figure it out. So I'm willing to accept the existential risk of the expropriation of my property if the United States goes full on communist. But you can expect that I will agitate in favor of capitalism between now and then. And I'm an optimist. So I don't dismiss the presence of evil in the world. You see North Korea, you see Cuba, you see Venezuela. There is evil. It did happen. I just happen to believe that at the end of the day, Bitcoin is a force of good, and it's going to bring people back from the brink, and it's going to remind them that maybe they should embrace technology and freedom and capitalism and property rights and all of those things that made America great.
All right, Michael, one last one here. I suspect you're a sci-fi guy. So here's the deal. If we reach artificial general intelligence, the AGI, which I think a lot of folks who are in the Bitcoin think we might do sooner than later, don't the machines take the Bitcoin right out of the gate?
They won't take it. They will adopt it, right? You're going to have billions of AIs, and they can't get bank accounts, right? And by the way, the AIs are smarter than us. And so if you were an AI, you wouldn't invest in gold or silver or glass beads or copper tokens, and you wouldn't buy securities, and you wouldn't buy real estate, right? Not because it's hard to buy it. By the way, it is hard to buy it. They'll be blocked from the 20th century economy. No one's going to sell the AI the house, and they can't trade bonds, right? So they'll be blocked from the 20th century economy. But the truth is, they'll look at it and they'll go, well, don't we want to actually grab billions of dollars of stuff that's going to, I'm going to grab 5 or 10% of all the money in the world forever that moves at the speed of light, that's in cyberspace, that no one could steal from me. Why wouldn't you? I mean, I think they're smarter than us and they're faster than us. So yeah, Bitcoin will be the reserve currency of cyberspace. Or let me restate that before I get myself in trouble. It's the reserve capital of cyberspace. If you're going to store your capital asset, and as the AIs accumulate it, they're just going to drive the price through the roof. And so if you're a person, the smart thing to do is front run the AIs. They're not going to steal it from you. They can't steal it. They're just going to trade you pesos and rubles and real estate or whatever else services you want for your Bitcoin, and they're going to keep it because why wouldn't you? It's the smart thing to do.
Michael Saylor, the executive chairman of MicroStrategies, a visionary clearly, and somebody Yeah, as you know, you think about steadfast people that have had their beliefs. You know, you mentioned Rockefeller. I mean, there will be books written about you being this century's Rockefeller. So, Michael Saylor, your time is valuable. We appreciate it. Thank you so much for joining us on the tape.
Thanks for having me, guys. Always a
Michael.
pleasure.
Vid.ai is 90% off since it's Black Friday, and you can join right now at the biggest discount that this software will ever be.
Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. 101 on the East Coast. Guy Adami, Dan Nathan, soon, and I mean soon, to be joined by the great Carter Braxton Worth. Fascinating day, made more fascinating by a couple things we have to bring to you right now, Dan Nathan.
Yeah, we're doing a little housekeeping here before we get into it. On Tuesday, December 10th at 10 a.m., our fine partners of FactSet, Guy and I, are hosting a webinar. This is really fascinating to us. We spend a lot of time talking about generative AI. What are some of the use cases? Why are some of these companies spending so much building out the compute? Who's using it? How are they monetizing it? Transforming the financial landscape, AI's role in revolutionizing technology and workflows. Go to riskreversal.com. Sign up for it. You'll be doing us a solid. Show up there. Guy and I are moderating. Katie Stepp, she's the CTO over at FactSet. Guy, you and I got to know her at the FactSet Focus event. We got to hear all about their plans, how they are using generative AI. And here's one, Dmitry Shevelenko. Nice. He is the chief business officer at Perplexity. This is one of the most interesting companies in the entire generative AI space. Look at those two good-looking guys right there. And there's Dmitry. There's Katie. We've had Perplexity CEO Arvind Srinivas on the Tape podcast. He's joined us on the Fast Money program. So tune into that. Go to riskreversal.com, December 10th, Tuesday, 10 a.m.
I think it's going to be a lot of fun. I'm looking forward to it. It doesn't cost you anything other than your time. So register. With that said, yesterday, you know, sometimes sort of the stars line up.
Yeah, they do.
Yesterday, we had an opportunity to sit down with Michael Saylor, the executive chairman and founder of MicroStrategies, a podcast that dropped today. You can also go to our website, check it out on our YouTube channel. But on the day that Bitcoin crosses 100,000, the timing could not have been better. And we had a far-ranging conversation with Michael. Maybe it's 35 minutes, so it's not a long haul. And he gives the reasons why, you know, he thinks Bitcoin market cap could be 10x that of the gold market. I'm not trying to sort of bury the lead or get ahead,
Well,
but
we'll
it's
hit that.
interesting.
We'll hit MicroStrategy. We'll hit the Bitcoin. We're gonna hit the Bitcoin with Carter. Let's just get into it because you know what? Oftentimes we keep Carter waiting
Bring him
in the
in.
wings. I know he's doing some fine work there on the charts while he's waiting, but let's just do it. Carter Braxton Worth, welcome to the market call. How you doing, bud?
I'm good. What's the good word? Yeah,
Say
Bitcoin
you as
makes a
Carter.
milestone today, right? Bitcoin.
Well, as you drink your coffee, yeah, it hit a milestone, and let's get into it because you brought a bunch of charts to illustrate. Well, good. What do
Yeah,
you say?
no doubt. So before we hit the charts, Carter, give us a sense. You've been charting stuff for like 30 years in the financial markets, right? When you see this sort of enthusiasm about a risk asset, now we've seen it before in Bitcoin, right? And I think that's one of the reasons why a lot of normies like Guy and myself, right, who are trying to figure out the value of it, we're trying to figure out what the interest of it. You know, it used to be a very retail centric sort of thing, and then it got into basically there was folks building on other blockchains, Ethereum, right? And the whole idea is going to transform all these different industries. Well, that really hasn't happened, at least from our perspective. But the Bitcoin, you know, the folks that are into it, and many of them have not wavered. One of those guys is Michael Saylor, right? So for many who kind of suffered through the Bitcoin winter of, you know, we had one in 1819, and then we had another one in 2022. Some of those folks have just heads down and kept believing, kept adding to it. That's what Saylor's done. Talk to us about what you think about a risk asset like this that has had these peaks and valleys and it's still here. And now it's 2 trillion, north of 2 trillion in market cap.
Yeah, and we meaning the firm and my work have had all sorts of judgments, some good, some bad, sometimes short, sometimes long. And this is the kind of asset you said stuff, right? You said you've charted stuff, and that's the key thing because we don't look at what it is, right? We're looking at price action or patterns, independent, regardless of the size, the theme, the very essence of what kind of business. In this case, is it a business? What is it? Is it blockchain? And so this is no different, right, than any other circumstance where you study the flow of money, right? And that's what this is. So the question is, obviously, this is very popular, just as it was very unpopular at one point in the preceding 3 years. Has a lot of, but the two things that were, at least my understanding, that have nothing to do with the charts. The two things that were said was one, that it was a store of value and it was like gold. That has been that notion has been sort of disabused, if you will. That is not the case, right? It has a higher beta to the S&P. It's a risk asset, and so that's out the window. And that doesn't make it good or bad, but that. Notice you don't hear that anymore because that has been proved wrong. What is proved right is that it has some life, it's enduring, and it is becoming increasingly a part of the mainstream. The big sell-side brokerage firms have crypto products and crypto desks and so forth, and it is here and presumptively here to stay. The question is then, on a trading basis, can you profit from it on the long or short side in any given moment, any given hour? There are day traders, there are people who are buy and hold this like any other asset. And so from our point of view, we're trying on an intermediate basis, sort of that 3 to 5, 4 to 6, 4 to 7 month time frame, trying to be tactical and find moments where we can profit and get long or short. And so the only recent efforts to that end have been that we have what is called a measured move, right? This strength of the past 3 months, and most notably since the election, leaves Bitcoin at a level where it has achieved a milestone, not the 100,000 as a round number, but has achieved what is known in old-fashioned technical parlance, a measured move. And so we're thinking here, and we published as much, it was a follow-up to the late September, early October report to buy, the follow-up was to start trimming. And so here we can look at it. I think we have 4 charts in total, guys. And this is sort of a bit longer term. And let's now put in. We can flash that just to make a point. And so the Bitcoin was in a range, right? So it has the great run up of 23 and early 24. Gets quite extended, and then spends the better part of a year, right, consolidating. Now, when you break out from a range in which you've been mired, whether it's a stock or currency or commodity, could be corn, could be cocoa, could be cryptocurrency. One way to try to figure out where you might be headed in the event of a breakout is what is known as a measured move. And in simplest terms, you take the width of the range that existed, the preceding range from which the breakout has occurred, and then you project that higher. And so at 98,400, that's where we publish a note, and it just said trim, and it was a follow-up to play for the breakout note of September, October. And so we're a little higher than that, but we're whether it's the milestone that it was a magnet and then people want to take profits, it's a trim by my work. Now let's look at a shorter term, and this is just over the past 12 months or so, and then put in some lines in here as well. Kind of you could say that's light dusting. You're only connecting a few points, but basically we would again be trimming, and it's all about your time frames, right? One says, no, I'm holding Bitcoin for 600, 1,000. Okay, but then you don't need to talk about the chart. You go play golf and just hold it. Right? And so it's who you are in the market, what your time frames are, what your objective is, and this is like anything else, a trading vehicle. It lends itself to that process.
The range is, that measured move is always interesting. And when you do that kind of work, it always seemingly comes to fruition on the back end. And by the way, this is on the back of you being bullish for a period of time. So this was the right bull call, the measured move in terms of you probably got what you were looking for. Now you're saying, now's the time to trim and look for a pullback back to that prior breakout level. Makes a lot of sense. So when you couple that, Dan, with that channel that Carter just shows us, that just sort of galvanizes or reinforces what I think the measured move is telling you.
Yeah, and we get questions all the time, Guy and myself, and obviously, we are not technicians, but we often look at charts. It's an important input in some of the stuff that we do. But I love when Carter says, understanding who you are in the market, like what are your time frames, and the conversation that we just teased with Michael Saylor. I mean, he is obviously religious. He has never sold any Bitcoin. He uses every opportunity, up or down, to buy it. Most people in the market don't have that sort of risk tolerance, right? And so that's why I think Carter's work is really useful from the standpoint, if you're just a trader, if you're watching this right now, you care about what's going on intraday, and the like, and these charts are about as good of an input as you're going to get. Carter Braxton Worth, we really appreciate your 2 cents. We appreciate your work. Thanks for stopping in. All right, my man.
He's going to be on Fast Money tonight, by the way. So you can see TBW on Fast Money.
I mean, you know what I love about what he just did there? I called it stuff. That was pretty inarticulate, if you will. But I think the way he rounded it out, like he doesn't care what the ticker is,
Well,
right?
that's
Like that's that kind of main point there. Huh?
So I agreed, and he always points that out. Not that he's not able to break down fundamentals, but that's just not what he does. So let's look at MicroStrategies because, as we said, we spoke to Michael Saylor, and what that has become, in some ways, is like 3, 4, almost 5x levered play of Bitcoin. And why do I mention that? Because again, we looked at Bitcoin since September, let's just say, and Bitcoin is maybe up. Well, I've been round up. Let's call it up 50% or so over that period of time. Well, that same period of time, you saw MicroStrategies go from basically $100 on the downside.
Yeah, let's go to that longer
to
term
north
chart.
of $550. So you can do that. I mean, that's obviously a 5x. So when you have the underlying commodity or currency or what security that's moving, and you have what's tethered to it moving 3, 4, 5 times X, then you get to start the deep end of the pool. Now, that is seemingly coming back down to earth in terms of the movements, but one has to ask themselves, what will happen if Bitcoin were to have the back and fill that Carter just talked about, which makes sense? What will happen to MicroStrategies? My sense is you get a 2, 3x move to the downside and maybe fill that gap that was created in early November.
Yeah, so interesting about that you mentioned that gap to 300, okay? And then it kind of was off to the races after that. So Carter just went through on the Bitcoin, the measured move, right? So we had that move that was, 50,000. That's where it was consolidating. And then when it broke out, it did 50,000. It got to 100, right? So if you look at this chart, you see the guy's point, 100 to 200 was that consolidation range that it was stuck in. And when it broke out to 200, it went straight to 300. Once it got to 300, it went straight to 500. What's that doing? It's taking advantage, I guess, or it's responsive to the leverage that was being taken to buy more Bitcoin. That's why you have this massive spread to Bitcoin. They own 400,000 Bitcoins at an average price of just under 60,000. So you can do the math there. I think their holdings they spent 25 billion. Right, they raised a lot of convertible debt at a 0 coupon, right, and they're buying the Bitcoin now. Michael goes through in great detail how he's thinking about the financial engineering around this, and that conversation, go listen to it. Guy, you and I were kind of dumbfounded. We were just sitting there for like 10 minutes as he was explaining it. We found it's very interesting, but I guess deep end of the pool sort of stuff here. There it is. You can go find it on our YouTube page. That's Risk Reversal Media. Subscribe while you're there, by the way. And fascinating conversation. We just kind of want to look at the charts here. We also think it's important to note, while there's a lot of enthusiasm, obviously, around Bitcoin, there's unusual enthusiasm around the MicroStrategy.
No doubt about it. And to a certain, I think he's aware of that, and he embraces that. He also said, and pretty much, and I'm paraphrasing, but as long as the market allows him to do what he's doing, he'll borrow money extraordinarily cheap and convert it, and he's going to continue to do it. He doesn't shy away from that. At a certain point, something will happen where that's no longer, I don't know, that ability is no longer offered to him, and then he'll move to something else. But he's made it abundantly clear that, a move from 50,000 to 100,000, when you think something is going to, 10x of where it's currently trading, $5,000, $10,000 is meaningless in the long-term game.
Yeah, no doubt. Guy, before we get to a couple trade updates, option trade updates, and I'm going to be running the legend here, buddy.
Love it.
Robinhood legend. Do you want to take a couple questions here?
Yeah, I have a couple questions. So this is more of a statement. So this is from Chris L. Timmy, I don't know if you want to pull this up on the board. It's my birthday today, and I was hoping we get a mini rant from Guy. Okay.
Oh, wait. How was your traffic? That's all I got to
No,
know.
no,
that
actually,
from
today I
traffic was
left.
fine
I left
today? All right, so
particularly
different
early
rant
today. It was snowing. It was
You want to
actually a
rant
nice
about
snow.
the Rangers?
No, they don't play until Friday. This is what I'm going to rant about, if I may. So you share, Chris, a birthday with Walt Disney, which is beautiful. You also shared a birthday with Martin Van Buren. By the way, this is off the top of my head.
What number president was he?
If I had to guess, he was 13.
So it was in the mid to late.
That's
18,
a
was it the
total
mid to
guess,
late
by the way.
1800s?
Total guess.
We'll put it in the chat. Whoever puts in the chat,
Yeah,
we'll send them a
mean,
t-shirt.
I'm guessing.
First one.
Because
Market call
Lincoln
t-shirt.
was 16. Maybe Van Buren was earlier than that. Martin Van Buren was born in upstate New York. He married a woman named Ho. So he married a Ho. I know that this is not, I'm not, look at me, I'm not looking at anything.
Bill.
But Martin Van Buren was 5'6" tall. So here's my rant, okay?
Like, that's like Mike Bloomberg.
Short.
Yeah.
I have no problem with short people. I mean, you can't help it. You
short
dance with the
people.
girl you brought to the prom. This is my problem with you short MFers, if I may. I'm 5'6.5". I'm 5'7.25". That's like when you're 4, you say you're 4.5 years old. You're either 5'6" or you're 5'7". And short people tend to do that because they're looking for every effing advantage they could
By
get.
the way, tall people do the same thing.
I have never done that in my life.
You're a specific sort
I
of
have
tall person.
never done
can
that
we be
in
really
my
honest?
life.
I know, but a
No,
lot of
tall
folks-
people. I'm 6'1",
What do you
I'm
think
6'2", I'm
like
6'3".
you're at the NFL
I'm
combine.
5'11"
You're at
and
the
a
NFL
quarter.
combine,
Stop.
and you're 6'3".
How many people in the
quarterback?
NFL combine?
200.
It's for the population out there, and Bill Hockman knows exactly what I'm talking about.
Tall.
So he doesn't do it. But if you're one of these short blanks, do yourself a favor. If you're trying to curry favor with somebody you're looking to impress, don't say I'm 5'7.25", because I got to tell you something. I'd walk out of the effing room. There's my rant,
Okay.
Chris.
Happy birthday, Chris.
Happy birthday,
You've got
Chris.
it. The only thing I'm going to say is, you're really talking about males for the most part, because most women, I think the average.
I don't give a shit if a woman.
What's
They
the
can do
average
whatever they
height
want.
of a woman in
I have no
America?
idea.
I want to say it's
5'6",
5'5",
5'5", whatever it is.
They're short. Like you're going to rant against short women who are averaging.
I'm specifically targeting men that do this.
Okay.
And you know who you are.
All right.
By the way, my sense is
How did we
you're
get
also
to
that
Van
group
Buren?
of people that walk around in a pack.
How do we?
Because there's like safety in numbers.
did we
You
get-
feel like
how
you're going to
did
be
we-
okay.
how did we get to
I
Van
know I'm
Buren?
short, but I got 6 of my bros with me, and we're going to be okay.
By the way,
And maybe let's go. Hey, why don't we go get a pastrami sandwich and a cold
by the way,
one?
it's like Tom Cruise, one of your most favorite actors.
Short.
Short. Eddie Vedder, one of my most favorite musicians. Short.
Yeah, I don't know what the point of that is. That's you can. I'm not saying
but
you're allowed to be short. Just embrace your shortness.
You know who does that? Anthony Scaramucci.
He's
Every opportunity
He's
he's
short
on
as can
stage
be.
anywhere, he makes a
He also wears
self-deprecating.
shoes that are like 3-inch
By the
lift
way,
on
so,
them.
so does Bono.
Who?
Bono, the lead singer of U2.
Microsoft back on its horse from Situation Room. Well, that has a lot to do with what we heard from Salesforce and what we're seeing in basically all these software names. So I think part of the Microsoft move is on the back of the ETF. So everything sort of gets dragged up. So to a certain extent, it makes sense. The question really is, are we going to revisit the levels that we saw back in July, or are we going to fail at this level, Dan, that we traded up to in September 19th, if you want. You can draw the horizontal line right across.
468 is that level, guy. It happened in early July. You know, I'm such a dummy. And listen, you know what? We're
About
right.
what?
We're wrong. We're this, that. You know, the other day when Salesforce results came out and Mark Benioff, there was a clip while you and I were on CNBC's Fast Money.
Yeah, he
Benioff.
took a run at Microsoft.
Oh my God, did he take a run? He was like, "Hey, listen, go talk to people," and we might have talked about this yesterday. He's like, "Go talk to people at Microsoft. Ask them internally whether they're using Copilots." He was really aggressive on that. My final trade, and maybe it was a bit glib, and maybe I'm just glib. I don't know. I said I wouldn't chase Microsoft here, playing for a catch-up trade, and look what's happened. It's
Well,
playing
but you
catch-up.
know what? With the basically having hindsight, right? With the fortunate ability to have hindsight, you can say it actually makes sense now. But a lot of it is just, again, ETF flows can drive individual stocks. Sometimes individual stocks drive ETFs. Sometimes ETFs. So this really has nothing to do with Microsoft. It's just getting dragged up with everything else in that space. So that's that question. Big disparity between silver and SLV, SILJ, and silver. This is from Ed Morgan. That's a good question. I don't know the answer to that. I mean, I can speak intelligently about a few things. The disparity between SLV, SILV, and others I cannot. Although I will tell you, if it's anything like the GDX and the PHYS, there's a reason why, Dan, we always say avoid the GLD, go to the PHYS. That, I think, when gold, again, is working in a meaningful way, that's the one that seemingly works.
Yeah, and actually, you had a question from Michael Saylor about gold, and the shiny metal versus the nerd gold, which he's all in on, and he had some interesting things to say also about silver, right? So check that out. Listen, silver to me just seems like it's just stuck in the mud. What are the industrial uses and this and that, whatever? It's really not trading like you would expect gold to trade, and that we've heard again and again, Guy. At some point, that spread's going to get narrowed. Silver should have the same characteristics, yada yada. So let's move on from that. I wanted to hit this because we're going to update a trade idea I detailed on November 19th in the Jets. The Jets is the ETF that tracks the airlines. But I want to start with, before we get there, Jacob, I want to start with American Airlines. This is the news of the day, guys. So they're switching card issuers, from Barclays over to Citi. This is for one of their big cards. They reiterated guidance, actually raised it a bit. So let's pull up the American Airlines charts here. Look at that move. So it's come a long way. And then I want to kind of back it out, Guy. I want to look at a 5-year for a second here, and just to put some context of where this thing has been. That's a pretty nice breakout here. That's a log chart. It's going back about, I think, 5 or 6 years, back to 2018. You see a breakout like that. We don't have the volume on there. It's good volume. What does that make you think? It's through that 150-day moving average and through the downtrend.
So if you look at if you compare it to other airlines, for example, you look at American Airlines here at $18 stock, the all-time high, I believe, and don't at me if I'm wrong, but I think it was sometime in 2018 before the world went sort of pear-shaped, north of $60. By contrast, you look at a Delta, which I believe today made an all-time high. So what I think is going to happen here, that we've broken through this long-term resistance, is that you're going to start to see, and I hate using the term, but there's going to be some catch-up here in the American Airlines. So I'm not saying it's going to make a new all-time high. That's not my point. But you could see levels of like 23.5, 24, which was sort of the highs that we broke down from in the spring of 2021.
Yeah, and again, one of the things that we want to do as we're detailing options trades, way to play things. Usually we're looking at fundamentals or catalysts. We're obviously, like we discussed before, we're using technical inputs here. This is one of the things that you see a chart like this go through a long-term resistance level, go through some short-term smoothing mechanisms like that 150-day. Look at that double bottom. It was like to a T. Listen, what I was playing for is a rejection.
Right.
And let's see how much this could last. Pull up the U-All, the United, the guy just mentioned here also.
Delta.
So that's
United.
having a day on the back of this too. So let's go now to this trade idea I had in Jets.
NOV 19, I believe.
NOV 19, you got it, baby. So at the time I was looking at a put spread here when the stock or the ETF was trading around 24. It was the Jan 24-21 put spread, cost about 80 cents. I was buying to open one of the Jan 24 puts, paying about $1.05, selling to open one of the Jan 21 puts, about 25 cents, cost me 80 cents, break even at 23.80. Let me drive here, Jacob, because I'm going to pull up the legend. I'm not feeling like a legend on a bad trade like this. So there's the Jets. Let's just look at the chart really quickly again. This is you look at this time frame, it looks like it was consolidating, a little bit of a flag. You get that nice breakout. It's on big volume. God, this is probably going to be one of the biggest volume
100%.
days since that earnings announcement a few weeks ago. You see the volume there. You can see my cursor right there. You see that gap. Let's go to the options chain. That was January. I'm going to pull up the January 17th. I'm going to look at the 24. Let's say, so if I bought a put spread, I was buying the at the money, and let's say I was going to sell this. I'm going to sell that 24, and then I'm going to buy the 21. Okay, so that's 34 cents. You can see that I paid 80. What do we like to use?
50%
premium stop. So, it's hard to do this. I wanted to highlight this, guy, because the gap today put it below that 40 cents or so. Okay, so here it is. I paid 80. It's worth 34. Am I going to go and just sell that right now? Maybe not. Let's see how the stock closes, United, because if United closes after a big gap towards its lows and United comes in, all the components of Jets, then I might be back in the game. So when I say about 50% premium stop, I just want to be really careful. That's not set in stone. I didn't have an order, right? Like a good till cancel order in the legend to do that. So I just wanted to make that clear. God, does that make sense?
Makes
from a risk
sense.
management
And I'll
standpoint?
tell you, I mean, this is going to be one of those days. It's shaping up, and it's only 120 or something, but Just keep an eye on today. My sense is the VIX is going to surprise some people late in the day. So your point about you can't be formulaic in our world. We throw out formulas, but these are living, breathing things. So I think letting the day sort of play out today might make some sense. And I think you're going to start to be surprised by some of the things that potentially could begin to roll over here. So
all right,
keep that in mind.
Surprise rollover. This was Tuesday. Intel had that big
That's on
reversal.
me.
No.
The
Well,
Intel I was the one, again.
Well, what I was trying to detail, though, guy, is how to play something contrarian
100%.
that's really weak. And you look at this, you say, we're catching a falling knife. But, one of the reasons why we like using options, again, if you want to be contrarian and you want to buy a stock and, it keeps going lower, well, you keep adding to your risk. When you buy, like in this case, a contrarian call spread, you know what your defined risk was, and then it's about managing the risk, not too different than we just talked about with the Jets. So look at this chart. Let me just kind of go shorter term here, guys. So here's a 3-month. We're kind of back at a level that's 21-ish or so, but I'm already in the trade and it's already working very poorly, right? So sometimes, the idea of averaging down is just not most of the time it's not a good
It's
idea.
never the first move when you're in a bad position. The first move should not be to add to it. It's to sort of take it off and then take part of it off.
Move
and
your feet. Isn't that what we
move
say?
your feet.
How many times did you have someone that you worked for it when you were a young man? They said move your feet. Like
maybe
first
they said
loss,
other
best loss. You know what I mean?
First loss, best
That's
loss.
what Carter says all the time.
Carter says
all right,
all the
so
time.
this was from Tuesday. All right, the stock was trading at 22.5. It was already down from 24.5. I think after the announcement on Monday of Pat Gelsinger leaving, that's the former CEO, has been there since February 21. The stock was trading maybe as high as 26. Is that right? Ish or something like that.
Yeah, I think.
Here, let me
did
go back
print
to the
tw-
chart.
No, I
Hold on.
think it printed 26.
In the pre-market, it was trading, I think 25.60, but the pre-market was trading higher.
Yeah.
You see that went from 26 down to 20,
which is
remarkable.
remarkable.
It's a huge move. All right. So again, at least I'm not long the stock up here. So let's go to the options trade. What I was looking at, February expiration here. So let's move this thing around a little bit. This is how easy this thing is to do. Let me go to Feb. Give me a second here, people. There we go. Bang. We're looking at the Feb 24.34 call spread. Now, that was kind of out of the money already by $1.50, and we were paying $1.50. So we knew the break even was high here. So maybe, Jacob, we can just flash this up for a second here and go back to that. Okay, so that was 22.5. That's where the stock was trading, 24.34 call spread in February. I was buying to open one of the Feb 24 calls at $1.75. I was selling one of the Feb 34 calls at 25. 150 was my max risk. All right, let me go back here now. We're at February. Let's just look at this. Okay, so we were looking at the 24. Okay, so let's just say I was looking to close this thing out. I know that that's kind of small, and I was looking to buy back, okay, the 34, and you can do the math right there. What is that? It's about $1. Why is that only $1? A loss of 50 cents. One of the main reasons there is because it's February expiration, right? There's a lot of time to expiration. So that's one where I'm going to keep a really close eye on. If we don't have that thing coming back towards that 22.5 strike, I'm going to look to cut that. Does that make some sense, guys?
Makes sense. And again, these are living, breathing things. And I was the one that thought, maybe that was it on the Intel front. Listen, I'm going to still say there's 2025 could be a fascinating year for Intel. Their problems are deep, but so much has been priced into the stock. So anything on the margins incrementally, even if they make an announcement, you know what? Maybe we're not going to make our own chips anymore. Maybe something like that could be interesting.
All right, so that's a good segue. Let's pull up Jacob Taiwan Semi. We have a chart here, and this one was kind of interesting to me because Monday morning, when Intel was initially trading up, Taiwan Semi was trading down, okay? And then as soon as Intel started trading lower, Taiwan Semi started trading higher. So here it is, guy. It had like a 13-14% pullback from those highs, I want to say, a little more than a month and a half ago or so. That was after earnings, and it looked like it was really going to test that 150-day, which is a pretty nice uptrend. So now it's had this huge ramp. And so again, the idea to what you just said, if Intel abandons their desire to build fabrication plants, right, to build the chips, Taiwan Semi
wins. And that's exactly what this move is telling you. So you got to watch that as well. And then you got to watch how it trades if we get to the previous highs that we saw at the end of October. So that's that. I got one more question. This is, and I've heard of this stock. but I don't know anything about it. But I do know this much about trading. So we have a question from Fernando. Can you all see what the downside move on AAOI is? That's Applied Optoelectronics. This is a name. He's wondering why today the stock is down about 18%. Well, the short answer is because look at the move it's had since August. This was a $7 stock in August. It recently traded up to 44. So if you're in this name and you can't stomach a move of this magnitude after the run that it's had, you just got to sort of reevaluate things. By definition, you're going to see back and fills when you have these types of parabolic moves. Dan.
Yeah.
That's why I wanted to bring it up.
Yeah, and so when you ask about what the downside is, so I'm looking at January expiration, and maybe I'll pull up the legend again, Guy, if Jacob will let me run here. So what was the ticker of that one?
AAOI.
AAOI. Let's see if I have this. Okay. So here, AAOI. Really quickly here, people. Let's go to January expiration. We're only a week into December, so you can do the math on how long that is. Let's call it 5 weeks, 5.5 weeks. Is that what we got, Guy?
Mm-hmm.
So the stock is trading at about $36. I'm going to go look at the 35 straddle. That's the call premium plus the put premium, and that's going to cost about what's the math here, Guy?
Can't see
10
it.
10 and a half, 10
10
and a half or something like that. So think about that. The stock's trading at 36. The at the money, really the in the money straddle here on the call side is basically $10.50, 36 stocks. You can do the math there. This thing is so pumped right now. It's almost impossible to play in the options market from a directional standpoint. If you own the stock and you had this big run, you own it from single digits or something, the idea of selling some calls against it, doing a sort of overwrite would make some sense, taking some premium.
Especially when you can take advantage of the premium. So that's it. Last question, and then I got to fly. So 77 Figures asks, action today is trash in the SPY. Now, that was out there about 20 minutes ago. And if you do a short-term chart of the SPY, Jacob, you'll see he was actually spot on. We've seen a pretty significant sell-off over the last 15 or 20 minutes. I don't know on the back of what. But as I mentioned earlier, this is one of those days where you sort of want to watch very closely. We did make an all-time high today in the S&P at 60.94. We've obviously traded off a bit. It's going to be interesting to see how the rest of the day plays out.
Yeah, so just, again, a little housekeeping. Guy and I had a great conversation with Courtney. Been tracking her career for a long time.
Yeah,
Guy.
for a decade.
She used to work with us on the production team at Fast Money 10 years ago. So we had a great Fed preview. Courtney's the reporter for Axios, who is in the room at the Fed pressers. She gets to ask the question for Axios. I just want to flash up the Fed Watch tool really quickly, Guy. So we talked about this with Liz yesterday on the market call. At one point over the last few weeks, the probability of the Fed at their December 18th meeting to cut 25 basis points was like 50-50. And then earlier in the week, it was like 62. Now it's 72. So that's interesting that's creeping back up. And, all of us have to keep an eye on what President-elect Trump is saying about, we know that he wants to see rate cuts. And so we'll see what happens as we get into December 18th. Last thing, let's just do it again, Guy. On Tuesday, that's Deck 10 at 10 a.m. Why do we keep bringing it up? Because we're super excited about it, transforming the financial landscape, AI's role, and revolutionizing technology and workflows. We have Katie Stepp. She is the CTO at FactSet. This webinar, you can get on there at riskreversal.com. Please go register. And we also have from Perplexity, and I'm super psyched about having him there. This is Dmitry Shevelenko. He is their chief business officer. We're going to hear from them what sort of customers are using their technology and what sort of productivity gains are they getting and where are they in the life cycle of all this.
Sign up, people. Check out our interview with Michael Saylor.
Yep.
That's pretty cool. Go to our Risk Reversal page, subscribe to YouTube. And this is the genius of Bill Hochman.
Really?
Yeah.
There is genius there?
He did. He texted me during my little rant there about Martin Van Buren, and he said, more like Martin Minivan Buren.
Oh, jeez.
Minivan Buren.
If you're in New York City, just Google Bill Hochman. He's probably playing at one of those very, very nice downtown, performing at one of those very nice downtown comedy clubs. Bill Hochman. That's Hockman.
He is the man.
All right, should we get out of here?
I've enjoyed it. Today is Thursday. Lots going to happen, I think, the rest of today. So stay tuned for that. We'll be back on Monday, but check out our podcast, which will drop. Dan mentioned them all. And the Saylor interview, I think if you're into the crypto or if you want to learn more
Crypto
about it,
curious. You can be
if you're
crypto
crypto curious, that's one to listen to or watch. Thanks, folks.
Thanks, everyone.
Cek Shopee dulu, cek Shopee dulu, termurah, gratis ongkir. Ayo cek Shopee dulu. 12 Desember, promo puncak Shopee 12-12 birthday sale.
Bitcoin just hit $100,000. Here is what I think happens to Bitcoin, Ethereum, and the rest of the crypto market next. There are a few important questions I want to answer today for the new audience coming into crypto. Number one, is the Bitcoin top in? Are you too late to buy Bitcoin at 100K? How much more upside is there and how much downside can you expect for volatility? Number two, what part of the crypto bull run are we if music stops? This always happens, but are we already at the peak or top of the euphoria, or are we halfway there, or are we still early? Let's look at the cycles. Number three, is it still a good idea to be buying altcoins now? Does altcoins outperform Bitcoin after this period? How do their cycles match up? And then number four, which altcoins should you be buying? Are there any real standout winners that I could clearly see? I, in fact, do think something right away is about to run. I'm going to show you. It's actually very obvious. And obviously, I'll give you my altcoin picks as usual for the top narratives, but I'm just going to be regurgitating all the altcoin content that we usually do. So that's going to be towards the very end.
Welcome Reward Special untuk trader baru. Mau tahu gimana caranya? Yuk, simak! Daftar di DuPoint dan buka akun real. Gabung Welcome Reward dan dapatkan $30 di akun promo. Trading di akun promo dan klaim rewardnya sekarang. Klaim profit yang diperoleh dari trading di akun promo. Reward akan dikonversi menjadi voucher MAP. Tunggu apa lagi? Yuk buruan daftar. Download aplikasi DuPoint di App Store atau Google Play.
FlexJobs is the #1 job site to find remote, work from home, and flexible schedule job opportunities since 2007. So, how does FlexJobs work? Well, FlexJobs is a subscription service for job seekers that features flexible and remote jobs. We have an A+ rating from the Better Business Bureau, and the monthly subscription costs allow us to fully vet and verify all of the jobs on our site. This means you, the job seeker, gets access to a safe and positive job searching experience. So let me explain how this process works. Our first goal is to remove the key pain point of finding great remote and flexible job opportunities that are typically harder and more time-consuming to find anywhere else. We work with thousands of companies who post flexible jobs directly to our site, but our superpowers really come from our team of excellent, educated, trained researchers who scour hundreds of job resources every day, including industry blogs, employer sites, reliable job boards, and more. So you don't have to. When they find a job listing that appears promising, they dig in for more critical evaluations. If it passes that phase, then the researchers find the most direct way for you to apply to that job, ideally on the employer site, but not always. Only then is the job added to our site, along with staff-written job summaries, company descriptions, company headquarters, and other useful information. Our second goal is to provide you with top-notch tools, resources, articles, and tips to support you in your job search to find a job that better fits your life. We offer our members specialized job search checklists, exclusive access to both career coaching and resume review at a deep discount, over 170 expert skills tests, thousands of articles, webinars with top hiring companies, educational guides and courses, and so much more. So, who should use FlexJobs? Well, the quick answer is anyone who wants a job with some kind of flexibility. A remote, telecommuting, part-time, freelance, or flex-time job. With over 50 career categories and jobs ranging from entry-level to executive, freelance to full-time, we really do offer something for almost anyone. So if you're motivated to find a remote and flexible job and are looking for a better and safer way to see them, we invite you to become a paying member and take full advantage of our member benefits. FlexJobs is here to help you find a better way to work.
So the bull run is heating up and we have no time to waste. So let's get right into it. So welcome everyone. If you're new here to the channel, my name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Now, if you have any questions, please leave them down in the chat section and we will do a Q&A at the very end. Okay, so first question, is the Bitcoin cycle top in? Is the Bitcoin price top in? What? Let me adjust my thing here. Here we go. So Bitcoin has hit 100K, but I don't believe this is the top. I do believe Bitcoin can have a lot higher upside, at least in the next 6 months. Now, my long-term target has always been 200K as an average return that I will be happy enough with to take majority off the table. You can find this even way back in my videos from last year. So I made multiple targets of this based on diminishing returns of the cycles. You can check out a couple of videos here. So on the recording videos on the channel, you can check these two right here. So Bitcoin going to 200K and my complete investing plan. Now these were, why I believe Bitcoin will hit 200K by 2025. This is still pretty accurate, although the cycle is extending slightly further, but nonetheless, those targets are still the same. Now, 200K is somewhere that I will be very happy to exit at, but I do believe we have potential to go a lot higher. However, just today, 100K is nowhere close to my targets. So I'm going to make it very clear to you guys, like, I don't think this is late. Now, that might sound good, and especially if you're just coming into crypto now, you might think, oh, wow, like, I must be a genius. You know, I buy 100K, it goes to 150K, it goes to 200K. So you have to remember that while Bitcoin still has upside from here, you are certainly not early anymore. So how much more upside really is there? We are, in my opinion, near this thrill stage of the market. So think about what you are hearing and the kind of people that are just getting into Bitcoin and crypto now. these are the people that just saw the headlines of Bitcoin breaking 100K, saw that whole number, that barrier getting triggered. And literally yesterday, I was browsing like WeChat, right? My Chinese social media app. And even on that app, there were like alerts of channels that I follow that are nowhere close to like finance or crypto. And they even reported Bitcoin breaking 100K in US dollar, even though this is a Chinese media, right? So these are the people that are getting triggered now since mass media coverage is happening yesterday when Bitcoin broke 100K. And these are the people that are probably just going to buy no matter what. And since they are still not completely late in the euphoria stage, they'll buy some. And as long as they can hold for a couple months, they will start to feel very happy. They will think that somehow they're geniuses and they're all going to be rich. And right now, right, a lot of the discussion, even yesterday, I've heard my auntie groups, when they were meeting during dinner, they were talking about, oh, should you buy Bitcoin? Should you buy this coin or not? You got to buy more. You got to tell everyone else to buy. So we're certainly at the thrill stage. We are definitely not at the optimism belief stage where you have the long-term investors that are mainly the participants. Right now, we do have these market tourists coming back en masse. So we're certainly not early, but we're not clearly at the euphoria yet. But just remember, this is not early. So that begs the question, since we can expect maybe a 2x from here, at least a 2x from here, that's what I expect from Bitcoin, from going from 100K to 200K. Is that going to be easy? Well, think of it this way. There will be at least one other 20 to 30% crash. You can call it crash, you can call it correction, whatever, from now until the end of the run. Even before Bitcoin truly tops, there's going to be a major correction. Maybe it happens now. Maybe Bitcoin goes to 80K. Maybe it goes to 150K and then comes back down to 120. At some point, this will happen, at least at a 20% percentage. By getting in now, as far as I can see, that's going to be the biggest risk for most people if you're just purely talking about Bitcoin. So as long as you're prepared for mentally your target, if you want to just target 200K like me, you can get a pretty easy 2x from here. And you just have to be able to swallow a potential 20 to 30% drawdown sometime there on the way. So that sounds cool, okay? But to us, true crypto investors that's been around for 2 cycles, 3 cycles, that's pretty boring, okay? We're not here for 2x. And you might say, oh, wow, that means like I should start taking profits, right? If Bitcoin is only 2x away from the top, how much more profit can I have? Well, this only applies to Bitcoin because from this part of the cycle, this is where truly the next 6 months to up to 9 months, I would say, is my expectation. This is the period where altcoins and the true crypto bull run starts, where you can literally throw a dart on CoinMarketCap and that coin will run over the next 6 months as long as you hold it. I'm actually very confident in this, and that's why if you just want any takeaway and you don't even want to hear about other people's opinion, just pick up your favorite coin that you know of, you're somehow a big fan of it, you hold it for 6 months, you're going to be up, and probably more than 2x, because Bitcoin itself is going to do 2x. So that brings us to the number 2 question, which is, what part of the crypto cycle, crypto bull run are we in? And how much longer can we expect to make money easily before the music stops? I give it 6 to 9 months, but I just want to show you how I come to this estimate. So the clearest way we can look at is the last 2, even last 3 bull runs. So there's a couple, there are 3 main factors you can look at this, 3 types of cycles. So the first is very simple, the 4-year cycle based on Bitcoin halvings. I think that's mostly a meme, but you can consider those. So the easiest way to track our progress there is using the Bitcoin stock to flow rainbow indicator. on TradingView, and very simple. All you got to look at is these color codings. So these color codings represent the number of months that has gone on since the last Bitcoin halving and how far away we are towards the next Bitcoin halving. So this directly maps out the 4-year cycle and how long we are in. So when you look at this, currently the color coding is about halfway through this like neon green, neon yellowish period. So that compares right now to about January 2021, and back here similar to June 2017, May to June 2017. So from these 2 points, you can even go back to the last point right here, and you take halfway period here, that's June 2013. So you can take these 3 cycle data points if you are a Bitcoin halving cycle maximalist. Then you look at this signal, okay, 2013, from this point on till the end of the cycle, there was 180 days, 6 months period. In 2017, from this period till the end, there was 200 days. Again, another 6 months. And then in 2020 and 2021, we had the first peak about 100 days after. And then if you count the second peak, we even extended out to 10 months after. So if you are a Bitcoin cycle based on halving event maximalist, you can expect at least a 6-month bull run from here, even on Bitcoin. This is the first way to look at it. The second way is by looking at charts, by looking at, relatively speaking, how high is the price compared to previous cycles. This can directly map out the current price compared to the previous cycle high, where people were very euphoric, and also compared to the cycle lows, where people were very negative. They were very fearful. So the easiest way to visualize this is with these like rainbow indicators. Now, the way I like to use this is not to use them for price predictions, because some people say, oh, you should sell and you should target with these reds. But this indicator alone has been readjusted twice already over the past 2 runs, because the cycle tops, if it goes above the previous cycle high, they add a new color on top. And if it goes below the cycle bottom, they add a new color on the bottom. So that part is not relevant so much to predict the price. But this does give us a sentiment check based on current price versus what people perceive to be high point in the cycle versus low point in the cycle, based on how high current price is. The easiest way you can do this is, again, on TradingView, you can map this out. And looking at right here, the current price at 98,000. Yesterday, we broke above 100K. We are at basically the middle of the band here, this light green band again. And if you look at a similar price point from 2021 cycle based on the market confidence, depending on price, this translates to roughly December 2018 when we were at 30K-ish. And then down here in 2017, this kind of translates to August 2017 when we were at around $5,000 on Bitcoin's rally. So then you can also even look at 2013, but again, I'm not going to keep looking at 2013 because you see these cycles were way too early. I think the 2 best data points are 2017 and 2021. So these 2 points, then you can map from the color to the top. So you see here in 2017, we had 100 days of more rally on Bitcoin. And back here, from this color code to the top, to the first top, we were about 100 days, and to the second top, we were about 300 days. So again, we are looking at between 4 to 10 months. Okay, that's wide range, but again, you just gotta have to look at what the data tells us. This is the second way to look at it. If you don't prefer, like to use time, then you can use price. And then the third way, there's also a little bit of a price action because we just broke above 100K, that psychological level. So you can also say, okay, 100K could act as, for example, 10K, right? What did Bitcoin do? How did people feel when Bitcoin broke above 10K for the first time? And that happened back here, November 2017. This is a case to be made that Bitcoin could be very close to the top. This is the only way to look at it that gives this signal. So if you really believe we are very, very close to the top, then the only way to argue for that is you are very much thinking that 100K is a huge psychological number, and that triggers the blow off top somehow. This did happen by the end of 2017. And even in that case, right, look, when Bitcoin broke 10K for the first time, the cycle still extended for another 20 days. So if you're in this camp, maybe Bitcoin tops out in 20 days. And the only way this could happen is Bitcoin goes from 100K directly to 200K in the next 3 weeks. If this actually happens, I might agree with you. That would be absolutely crazy, right? Then we could be potentially looking at a 2017 scenario where everything goes insane very quickly. But if Bitcoin starts to consolidate, and let's say Bitcoin just like trends sideways at 100K for even 1 month, then this whole thing is going to be invalidated, this scenario. So I don't think this is that likely. And then the last way to look at it is with the Federal Reserve's balance sheet and the global liquidity cycle. And that actually gives an even longer cycle estimate because what we're seeing right now is that the Federal Reserve has not started to use their balance sheet yet. So here is the Federal Reserve's balance sheet chart. Right now, that sits at $6.9 trillion. And the signal on this is that whenever the Federal Reserve announces a Fed monetary policy pivot, they start buying assets instead of selling assets, this will start to trend up. And that has accurately predicted the start of the last 2 bull markets and the end of the last 2 bear markets. If you want the full deep dive on this, you can check out my video from one month ago called Altcoin Season Starts in 1 Month, Here's Why. And I compared global liquidity and the Federal Reserve balance sheet chart versus Bitcoin chart and versus the Bitcoin dominance chart to show this signal. So the TLDR here is that if we follow truly what global liquidity is doing, technically the bull run hasn't even started. So this could be a X factor. Maybe this plays out that way. So maybe this is even just a warm up to the bull run. We could hope, right? I don't want to get everyone's hopes up too much. We have to watch and see what happens here. And the main thing here you need to watch is basically the next FOMC meeting on December 17th and January 31st. So during one of these 2 meetings, if the Fed comes out and announces a Federal Reserve balance sheet pivot where they start buying assets, we're going to see the Federal Reserve balance sheet start to trend up. This is essentially how the Federal Reserve will start printing money, and and then they can use that money to buy up treasury bonds and mortgage-backed securities, and all of that will trickle down into risk-on assets. So I don't want to go too deep in that because technically speaking, we are already starting the bull run quite clearly. So this could just add on the fuel if it happens. Okay, so these are the 3 factors we got to consider, which is if you consider the 4-year cycle timing, if you consider the Bitcoin price, how high or low it is compared to previous cycles, all of the indicators tell us together that we are looking at the shortest time frame is about 1 month if Bitcoin literally shoots up to 200K right away. The longest time frame is about 300 days from current point before the cycle tops. That's kind of my estimate range. Now, that is a big range, okay? And I know what some people will say, oh, like you're just saying like we're in a bull run, but it could end at any time. Yes, this is how you have to prepare. Anyone that tells you, oh, the bull run is going to end in March, in April, in May, they're throwing random numbers out. How I'm preparing right now is this. So I'm sticking to my same plan that I have had last year, and I laid it out on another live stream from November last year, basically 1 year ago. So here's a summary of my exit plan. I know that there is a period between now until at max 1 year from now. So before December 2025, let's say November 2025. Within this period, what are my trigger targets? Number one is if Bitcoin hits 200K and if Ethereum hits 15K, if both of these conditions meet together, that's going to be my signal to exit. Now, I'm going to show you why I have to include Ethereum there in a bit. Number two trigger is that if everything just kind of trends okay, I'm still going to exit by the end of 2025 because that will have been a plenty of bull run. Usually the bull runs don't last that long. And number three is if Bitcoin breaks its long-term trend, such as it breaking the 200-day EMA support or the 21 EMA support, or if it makes a lower high structure, lower high and lower low structure, then that means the price trend has been broken, the uptrend has been broken, and then that's my signal to exit. So what that could look like is something like this. Here is the Bitcoin chart, and the 30-day blow off top kind of scenario, very unlikely, is like this. Okay, where Bitcoin straight away shoots up to 200K, and then if it trends sideways here, I'm still not going to exit. But if it breaks down and forms lower high and lower low, a lower low and lower high, this is going to be my trigger. And when this happens, what you'll likely see is that the exponential moving average on a 200-day basis, this blue average line, this is going to trend higher and higher and follow, but somewhere near here, it's going to get broken below, and this is going to be my sell signal for the bull market. Now, am I saying this is going to happen this month? No. Nobody knows, okay? Whether it will happen this month, very unlikely. Next month, very unlikely. My expected range is about 6 months from now. And I'm going to show you in a bit why I believe, the bull run is not going to end very soon. But this kind of scenario could happen anytime over next year. So with that being the base case, okay, I'm looking at from now until 10 months from now, October, November-ish, 2025, like this. Next 300 days or so. Duration you need to watch out for is this. So when Bitcoin hits its top, let's say Bitcoin hits 200K, okay? And let's say Bitcoin tops out at 200K. That's not going to be the only signal that I'm looking for to sell all my altcoins, because when the bull run starts, Bitcoin tends to go parabolic first and trigger the kind of mass retail flooding in, like what we see right now, since it broke above 100K. But this is only the beginning stage of the true altcoin bull run. Usually the altcoin bull runs will lag behind the Bitcoin cycle top by at least 3 to 4 months. And I'm going to show you right now. Okay, so this brings us to the third question that I laid out in the beginning, which is it still a good idea to be buying altcoins now? And the answer here is absolutely yes. So let me show you a couple ways to look at this. The three main metrics you need to watch out for a altcoin cycle is the Bitcoin dominance. This is the number one metric that people look at for altcoin season. Ethereum's performance versus Bitcoin, because it's the largest altcoin by far. And then also the other altcoins outside of the top 10. So the wider altcoins, the ones that are very speculative, how they are performing against Bitcoin. So I have these three charts right here, and I'm going to show it to you very clearly here. So first we have Bitcoin dominance. Here are the two previous bull runs as indicated by Bitcoin dominance. So right here, as I've circled out in red, this is November 2017-ish. So in November 2017, basically was when Bitcoin broke above 10K. Remember, it broke above that psychological level. And even when Bitcoin peaked 3 weeks after that, from 10K to 20K, it's literally a blow off top on Bitcoin. Look at what happened to Bitcoin dominance. Starting from November 2017, this altcoin run lasted another 80 days. So even if Bitcoin shoots up from 100K right now to 200K, we're still going to see the altcoin season from now last for at least 2.5 months. So that's why, like that's the most conservative estimate you can have, is that altcoins are nowhere near their top yet. We have at least another 2 to 3 months, even if Bitcoin literally goes vertical and shows a blow off top. Okay, so this is 2017 where we had a Bitcoin blow off top. Then when we look at 2020, here is where Bitcoin really started this thrill stage. So take a look at here. I remember we had the Bitcoin rainbow chart pointing us to around, this is the part of the cycle we're at. And also with Bitcoin rainbow wave, this is the point of the cycle we're at. So from this point until the top, until the first top, and then until the second top, this point, we're talking about beginning of January 2021. And look at Bitcoin dominance. December 28, 2020, if you count right here, January 4, January 11, 2021, until the first peak, not even this later peak, right? Until the first peak, we had 4 months of altcoin season where Bitcoin dominance was going down. This doesn't get clearer than that. And down here, we're talking about May 2021. Even if you got in late, what happened last cycle was that this altcoin season actually lasted even longer. So during this period, from May until even January 2022, if you were very experienced in the market, you were still making money. If you were rotating from DeFi to layer 1s, and then from layer 1s to gaming, and then later on to like the DeFi Ponzi's again, you still made money. Technically, this was still altcoin season before eventually Bitcoin dominance started to trend up again. This was when truly all the altcoins gave their returns back. So at least according to the 2021 cycle run, we're going to have a 4 months long out season, at least, okay? So this is what Bitcoin dominance shows us. And that's why up here on Bitcoin dominance, what I'm looking at is at least for us to have this alt season lasting until March next year. Now, I did not expect this alt season to start prematurely, okay? Look at this little squiggly line that I drew up here. So I expected us to go into December for the next FOMC meeting before this clearly gets triggered. This squiggly line, although random, was what I drew on the last live stream. Yeah, here. 3 weeks ago when I was looking at the Bitcoin dominance compared to how the FOMC events play out. So since it didn't play out on November 6th and November 7th, I expected it to play out on December 17th to trigger the main altcoin season. but clearly we are already starting that. Okay, so this is Bitcoin dominance. TLDR here is that we are at least going to have a 4-month-long Bitcoin dominance related alt season. Now, there are a couple other ways to look at this. Bitcoin dominance only gives us the length expectation for how long the altcoins can run. So you can't really say, oh, Bitcoin dominance is going to drop this much or this much or this much. These numbers are not that useful, okay? It only is able to tell us how long the alt season lasts. But we can use two other charts to show this. So first is Ethereum versus Bitcoin chart. So Ethereum versus Bitcoin is super interesting right now. In fact, I had this chart drawn for like, I don't know how long, like probably 2-3 months now. So Ethereum is finally starting to show strength versus Bitcoin. If you really zoom in here, you honestly just got to watch this to make a new higher low. And I think we could see actually macro reversal on Ethereum versus Bitcoin chart. Now, the only way that this can happen is if